Hello, everybody. Welcome to Fairgrounds, the future of finance. It's an exciting day we have planned for you all here today, diving into topics such as on-chain finance and stablecoins, agentic DeFi innovation, machine-to-machine payments, and much more as we have guests from all across the Web 2 and Web 3 industries here to chat, to learn, to share their opinions, hopefully get a little feisty, but not too feisty. We're all friends here. But I want to kick off today with a conversation on-chain finance and stablecoins, which will be our first panel. And I will be bringing up all of those guests momentarily.
Sweet. Can everyone hear me? Can I get like a mic check? All right. Awesome. Hey, everyone. Welcome to the panel on the future of on-chain money and stablecoins. This is something that I personally think about when I'm eating and when I'm sleeping and pretty much every single other time throughout the day. And when I was asked to host this panel, I thought about like who the four companies that I most admire and most respect in this space would be. And we went 4 for 4. So very, very excited to have everyone up here. We don't have a ton of time. My plan is relatively simple. We're going to run through introductions really quickly on just who everyone is, what their company is, what are they doing there, and then we're really just going to talk about one thing, and that's stablecoins, where they play a role. I don't have a list of 20 questions or anything like that, but I like to keep things, like I said, short and simple. So going to be a lot of fun here today. Let's kick things off with intros. Chase, do you want to get us started on the intros? Just again, name, what your company is doing, any exciting announcements that you want to make or shilling that you want to do, go for it.
Yeah, hey guys, I'm Chase. I lead product at Braille. We help businesses create their own stablecoins and then have a unified API for converting between dollars and stables.
Cool. And Chase is being really humble. They also just raised a boatload of money and they're building a lot of really, really cool things. So Chase, next time I need you to brag a little bit more. All good. JT, you want to kick us off next?
Yeah, absolutely. I'm JT here, head of marketing at CoinFlow. We're helping businesses use stablecoins in real-world payments by making that blockchain part invisible and the experience effortless. We've had a lot of momentum here in the last year, including just announcing our Series A round here in the last couple of weeks. So excited to join the panel. Thanks for having me.
Yeah, it's going to be fun. It's going to be fun. Andy, all you, man.
Hey, everybody. I'm Andy. I lead partnerships and strategy at Transact. And in a nutshell, what we do is allow people to get in and out of crypto to fiat and vice versa. We have just raised some money also from Tether. We're very excited about that. And I think the biggest thing that excites me about our recent product launches is the MetaMask dollar, which we support one-to-one, seamless, very smooth experience on ramping and off ramping with close to no fees. So consumers can buy MUSD and participate in that product in a very, very nice kind of native and intuitive way. So that's my shilling.
Sweet. I love it. And last but certainly not least, Angel, you want to give us an overview of yourself and Sphere?
Yes, sir. Hello, everyone. My name is Angel, and I am from Sphere. We are the operating system for stablecoins. What that means is that over our time, we've processed over $1 billion in volume for primarily businesses, but as well crypto natives for them to transact mostly stablecoins and US dollars. We are now live with Mexican peso and Brazilian reais, scaling that pretty quickly. So yes, more exciting announcements to come, but right now everything is still en route. But thank you for having me.
Yeah, this is going to be a lot of fun. And for the audience, I highly recommend that you go check out all of these companies. Every single panelist up here is being way too humble about how good their technology is. Like I said, I picked my 4 favorite companies in stablecoins. These are the people that are, pushing the boundaries and not just using stablecoins for how they're being used today, but really creating the inroads and the infrastructure for how stablecoins are going to be used tomorrow. And that's the most exciting thing to me. But like I said, we're going to be focusing around one thing in particular, which is how stablecoins are going to look, and stablecoins and finance are going to look in 6 months, in 2 years, in 5 years. I think stablecoins is one of those things where the rate of acceleration and the rate of integration within both traditional finance and DeFi is astonishing. Like I have newsletters and I have Telegram groups, and I quite literally cannot keep up with the amount of people that are integrating stables or building out companies around stables. It's genuinely overwhelming and causes me severe amounts of anxiety. But that's besides the point. So my thesis, and I want to get everyone's opinion on this, and this used to be a very controversial thesis. It's less so now. Is like, hey, all payments are going to be coming on chain. I don't think that's the controversial part. For me, though, I see this as a world where there are tens of thousands of stablecoins that are all interacting with one another. And the cool part about this panel is that everyone here is not using one stablecoin. Right? Everyone here is using multiple different forms of stablecoins, whether they're issuing the stablecoins themselves or using a Braille issued stablecoin or working with, various different types of stablecoins. I want to get all of your opinions on what you think that number is going to be. I floated out tens of thousands, but also B, how you think that the future of finance is going to look with tens of thousands or 100 or, hundreds of thousands of stablecoins, and how that's going to look for your clients and consumers and also businesses as well. So that was a lot. Feel free to dive in there. Any questions that you want to pose, or more importantly, answers that you have. I am all ears, but now is my time to sit back and shut up. You guys are adults. Feel free to just jump in whenever you want.
Yeah, I can start. I think your number is high from where we sit today, but it's not unheard of. As you were speaking, I was thinking the common way people talk about this or think about this topic is no one thinks of a dollar being a Bank of America dollar or a PayPal dollar or a Citibank dollar. They're all dollars, they're totally fungible. What happens if we have many, many named partners and companies that are all issuing their own stables, and how that kind of shifts our conception? So if every financial institution of a certain size is going to issue their own stablecoin, then we might be in a world where we have thousands or tens of thousands or even hundreds of thousands on a global level stablecoins in the market. They might not even be, of course, all denominated in dollars to make this even more fun. And I think from a consumer perspective, everybody talks about, blockchain technology being a protocol. You don't want to think about it the way you don't worry about how your email gets sent. Same should apply to, for instance, which layer 2 your stable is on. And God forbid you're on layer 1, and maybe there's new layer 1s coming out. So all of that development, I think, makes it for a very interesting time in the market. And at least from where I'm sitting at Transact, we really try to, abstract away that complexity and make it super easy for a consumer. In our case, we're really worried about fiat rails. So we have, direct relationships with acquiring, and we want to do local acquiring everywhere. We want people to be able to send a bank transfer, and we want that to be as cheap and fast as humanly possible, maybe even other payment methods. So we're worried about abstracting away that complexity. But once you get on chain and you're picking up a stablecoin, my question to the panel actually is like, why should I care? Why should the consumer be picking a stablecoin? What happens if they're suddenly stuck in a transaction in one stable that they maybe got from somebody else, and they need to send it to somebody? Like, do they need to worry about what the receiver is using? And I think that means that in the next, 2 to 3 years, we're going to see a lot of development in the space.
Yeah. Chase, you and I have had this conversation half a dozen times. Sorry, Angel, go ahead.
Yes, I really want to hear from Braille, the Braille team on this, because I think it's very interesting, the amount of stablecoins that are coming out, because each of them, that to your point, like, why do people care? Each of them is going to provide different value propositions. And so the way that I kind of link it to is a lot like credit cards. These acquirers, these stablecoin issuers are trying to capture as many deposits as possible, and they're offering incentives in order for people to park their money with them. That's why, Circle historically, didn't give a lot of interest Coinbase gave that interest. Tether doesn't give interest. Now you have Paxos and all of these different stablecoins that are saying, we're going to give you the yield. Come with us. And it's going to be very aggressive. But I do believe ultimately the end consumer is not going to know what stablecoin they are. To his point, it's just going to be USD with differing interest rates that they are, being charged or like accruing. Now, that kind of brings a really big opportunity, which for us at Sphere, we're more targeting. We're not necessarily targeting being an issuer like other participants in the market, but what is going to be necessary is this aggregation, this ability to say all of these different stablecoin assets ultimately are a dollar. So if somebody wants to make a payment, we can connect that. We can connect these differing stablecoins on differing blockchains with differing assets and essentially allow them to be interoperable in the sense of that's what Visa and MasterCard do, right? When you have an acquiring bank and that's what the credit card network does, is they facilitate all of these banks' communication with one another in order for these payments to be made across the world. And so, yes, I do believe that there will be a ton of stable coins, but most people will only know of the dollar. It will essentially give way to a digital dollar.
You said something which I want to double tap into real quick, which is at the end of the day, it's a dollar. And you're right, but like one USDC does not equal one USDT right now across various different chains. And I think that that's one of the biggest problems that's happening right now is like a dollar doesn't equal a dollar, right? Like if you guys are sending money from the US to Bolivia, if you are working at a business in the US, you might want to use USDC because they're leading the charge in compliance or whatever it might be. But in Bolivia, no one uses USDC, right? Everyone uses USDT. And so I think we even need to go further to say, hey, you can choose whatever stablecoin you want, or the company will choose, but you also need to be able to move between stablecoins, which I think is sort of one step further than aggregation, which is fun. But
I hear you.
I don't know if JT.
So sorry, to answer your question, you're right. Like, why is a USDT dollar not a USDC dollar? I think it lagged. Sorry, am I interrupting you?
All good. No, you're good. You're good. I am lagging,
okay,
but I hear you loud and clear.
So to your point, why is one USDC not equal to one USDT? Right now, that's just a matter of liquidity. But in theory, right, every single dollar is backed by a treasury bill from the United States. The problem right now is that people are that it's a lot harder to wrap and unwrap the treasury bill outside of the stablecoin. But the liquidity itself, if you do crypto to crypto, it's very different than if you did crypto to fiat. So there's a bit of a distinction there that I would really love to hear from I forgot, I didn't hear the name exactly, but Braille, like, how you guys are thinking about the issuance of various stablecoins.
Yeah, I mean, right, traditionally, like USDC, USDT, obviously. So, I mean, if we think about on-chain stables that aggregate liquidity, I mean, I think the game really is mostly one. There will be, I think, a small number of stablecoins. I think what we're seeing, though, is as more Web2 businesses move on-chain, right, everyone is essentially replacing traditional bank accounts with stablecoin-enabled accounts that are denominated in their own stablecoin. And so I think near term, we continue to see an explosion. I think at this point, it's probably consensus, whereas a year or two ago, people still kind of rolled their eyes at the idea of lots of stable coins. I think near term, we see easily thousands of stable coins. I think an interesting piece is sort of medium to longer term. Do you continue to explode, or do you rebundle back into consortium type stable coins or multi-issuer models? Obviously love what M0 and some folks have done around that. I think that's an open question. Another model or sort of like mental model I like is like jobs to be done around stable coins. I think we've opened up the design space now. Things like Braille, but now, I mean, there's probably 5 legitimate stablecoin as a service platforms today. There's very easy tooling. You can run the experiments like in real time. And so what we're seeing now is people using the yield in different ways, people creating different models. You also see people do more like high permissioned or compliance type stable coins. So what I think is cool right now is we're almost like running the idea maze with these dollars in real time. And I think we will see in the next year or so, we'll start to see some extremely large businesses issue their own stable coins. It's going to be crazy, almost scary, I think, to see what some of these networks with distribution, I mean, even well beyond what we have in crypto today as they start getting into stables. And so when we start to see that, I think it'll be interesting to see if others decide to sort of join. I think the idea of doing your own stable at some point, that there'll be more incentive to kind of coalesce back together. But we'll see. It's definitely interesting times.
Yeah, I'll add into that. And I just think, from our perspective, like today there's dozens, maybe hundreds of experiments happening. That could come up to 1,000, as you mentioned, Dante. But I think ultimately tomorrow, 5 years from now, 10 years from now, that's going to settle into more of like a few regulated interoperable markets, networks, like you mentioned, that are really going to kind of bring this forward. Like for us in the B2B payment space, the best indicator of success will be kind of when people stop noticing that we're using stable coins and it's just happening instantly 24/7 globally. So I think regardless of where these experiments keep going, the number of stable coins that are out there, I think you're going to see that consolidate at some point, probably not in the near future, but eventually I think people will see the advantageousness of that and start to consolidate those down.
Yeah, and if I can add to that, before Transact, I was at Paxos and I worked on the Global Dollar Network, USDG, and I think the consortium model is super interesting. It has a few kind of wrinkles to it and how you take it to market and which players can participate. I'm not going to name any specifics, but you can look at the founding partners and then you can look at what that implies for further people that want to join that same consortium. Having said that, the idea of everyone kind of aligning incentives, pulling in the same direction, and also, just candidly getting compensated for their efforts in growing a specific stable, I think is powerful. When you get to kind of what we were talking about a few minutes ago, if you have the distribution, you can really gain or reap the rewards of growing a specific stable in a powerful way. Maybe if you're a big merchant, you want to pass some of those savings onto the consumer because you're making, whatever yield from the net interest margin. And that means that you can offset some interchange. There's a bunch of things that you can do. There wouldn't be interchange, of course, if you're doing stablecoin payments. But to me, the thing that I kind of try to get ahead of or try to figure out is how do we stop this from becoming Starbucks points or dollars or the Target red card. We don't want it to be closed loop. That doesn't necessarily mean that we're getting to that, future of finance that I think we're all trying to build here. I don't have an answer. I think that's an open question. We don't really necessarily want to go to a world where you have these stables that are all just sitting on an app that's owned by a merchant. Of course, then you can get into the world of the PayPals of the world, which is apparently trillions, and there it's a different universe, and that to me is a very powerful idea.
I think that's a great question that you brought up, because it is the trend. What we're seeing right now in this market most recently is the emergence of a lot of new blockchains, permissioned environments just for payments. I was reading yesterday an article on a Brazilian, I think, super app that has over $1 billion in their own permissioned blockchain internally. And that allows them to A, save a ton of costs, and B, keep their customers in their ecosystem, right? And so I guess my question is if that isn't the inevitability of where we're going, what would be the disincentive to do that? Because to me, it sounds kind of like the natural progression.
Yeah, I think that's a good point. I mean, I also think though that there's on that topic, there's multiple different ways to use stables. And actually, JT, and Chase, I don't know which one of you guys wants to speak on, how CoinFlow uses their stables, but it's a little bit of a different way than like most people are going out there and thinking about issuing stables, right? A lot of people are just like, oh, I'm going to mint this stable, I'm going to go back and forth, and I'm just going to either collect fees on it or collect yield on it. But you guys are doing it in a little bit more of an interesting way. And I think that the way that CoinFlow is doing it ties really, really well into what you're talking about, Angel. So I don't know which one of you wants to highlight that. Or I don't know if I just spilled the beans and I'm sharing your proprietary secrets, but I think it's a really cool thing.
Yeah, I love it. I'll just speak quickly to that. I mean, I think for us, like, we believe stablecoins aren't just the future here; they're the infrastructure of the future, and like it's our job to kind of make that feel normal right now, which can be kind of a struggle with some consumers, some merchants. But I think, one thing to kind of answer your question, like I think for us, like we see it really as like kind of an invisible middle layer that sits underneath these fintech apps, wallets, commerce tools, merchants, things like that really help just meet the pain points of these merchants much easier. You talk about instant settlement, you talk about 24/7 global availability, on-ramps, off-ramps, ability to kind of do local pay-ins and payouts. So I think for us, we really see it as that middle layer infrastructure. If someone knows about it, that's great. But a lot of the merchants we talk to, they just want that money right now and they want it instantly settled and they want it 24/7. And so this is more just really the impetus to drive that and help them reach those goals. So that's really where we sit. And I think for us, like, as governments and enterprises continue to like adopt these infrastructures and frameworks, it's going to start expanding much more rapidly to that non-crypto native kind of community and world. When you talk about Web2 merchants, even, traditional, brick and mortar at some point, like there's a lot of possibility here with these payment systems to really make it an invisible layer.
Huge. Like I said, big fan of how CoinFlow is using their stables and everything like that. I think recently we've also seen a number of stables that are being launched by people that are focused on like machine-to-machine payments. Like Cloudflare just came out with theirs, and I think that once the can of worms that is agentic commerce opens up, it's also going to be a whole new era for stablecoins, because the odds that every single agent from all over the world is going to use one single stablecoin is quite rare in my opinion. Like even today with USDT and USDC, you see people valuing those two stablecoins differently based upon their local currency liquidity and local currency utility, right? Andy, you were talking about how Transact goes from fiat to crypto and crypto to fiat. Like people value stablecoins differently for that reason. People value stablecoins differently for regulatory arbitrage purposes, right? Some people have Genius to comply with and Mika to comply with, and other people don't. And some people just have a personal preference. Like, hey, my neighbor onboarded me to USDT 5 years ago, and that's what I use. And that's perfectly acceptable, right? But I think that as the amount of stablecoins grow, those types of discrepancies are only going to grow as well, even if people are abstracting it into the background. You're always going to have one stablecoin that provides more benefit than another stablecoin in a specific scenario. And I think that what we're seeing right now is like this almost is creating an open and competitive free marketplace where every single stablecoin is going to have its own little niche, its own little competitive advantage based upon maybe the location that it's operating in, the financial institution it's associated with, the distribution method that it's operating under, et cetera, et cetera. And so there's a world where your grandma might go out and run errands for a day and she's using a dozen stablecoins depending upon all of those different things, and where each stablecoin has that unique value is going to determine what stablecoin she actually uses. And so I don't think it's going to be like a one stablecoin fits all world by any means, even when we're talking about, not your traditional remittance, but just like day-to-day spending and moving money around the world. To me, and I'm curious to get your thoughts on this, is like one of the things that I like about stablecoins, and I use stablecoins across, in the verbiage of every single stablecoin, regardless of where it is or who's issuing it, is like there's the way that money should work, and there's the way that money does work. And there's still a really, really big discrepancy between that. Like I can go and I can send an email to any one of you guys or a text to any one of you guys, regardless of what phone you're on or what network you're on or what app you're using for your email. I can't do the same thing with money today. I can't send my Venmo dollars to your PayPal account, and I can't send, my banking dollars into your crypto account without on-ramping it to crypto first. This sort of levels the playing field where even if there are 10,000 stablecoins, they're all composable with one another, which is something that really, really excites me. But for you guys, like in that world of hundreds of thousands of stablecoins in that open and free market, where do you guys see that market sort of going? Is it, hey, we're going to all optimize and there's going to be power laws like there are in modern economics? Or do you see that, hey, this is actually a scenario in which these tens of thousands of stablecoins can exist comfortably with one another?
I think that you bring up an interesting point. And as you were speaking, I thought to real world use cases. I'm actually from Argentina originally, and I'm in Argentina right now because we may or may not be expanding into Argentina soon. And one of the things that came to mind is all of the local players here. Like I met with the team from Lemon this week, and they're doing some amazing things and also expanding to other countries in the region. And people that have that wallet as an example, or maybe they use Bitso in Mexico or something, they will probably be using whatever Bitso gives them or whatever Lemon gives them or whatever Nubank in Brazil is suggesting they do, right? There's kind of an angle here of like what the fintech, this is not a retail use case, right? Whatever the fintech that they're most comfortable with is using, because they're going to have to off-ramp, they're going to have to cash out, they're going to have to use those stables somewhere before we get to hopefully, sometime, a world where the small mom and pop on the corner accepts, this is what Stripe is working on, of course, a stablecoin payment. So that consumer to me is very clear that they're going to use whatever stable they receive. Maybe if they're a freelancer, whatever stable their payroll company uses or something like that. And then if the currency, like here, unfortunately, as an Argentine person, there's devaluation and inflation, et cetera, you might hold in dollars and then convert when you need to spend. In other countries, maybe the local stable, makes more sense, and they just sit in that stable coin. On the corporate side, as you were talking about adoption, the total market cap as compared to the velocity, so the total amount of transactions in any given month, mainly B2B, is like so many orders of magnitude bigger. I don't know, it's like $300 billion worth of stables right now, but then the velocity, so the amount of stablecoin movement in a given month is in the many, tens of trillions, right? That to me says that all of these B2B players that are using stables are not sitting in them. They're just doing stablecoin sandwich. They're on-ramping, send a payment, off-ramping, boom, done. They're sitting in the stablecoin for very, very short amount of time. And in that world, I think it's all about what you were saying, like highest liquidity, on and off ramps, cheapest, fastest, all the factors that we discussed. And then the third thing I wanted to mention, as you started talking, that I thought was amazing, is like in a world where we have agents, we're probably each in whatever the next 5 years going to have 10,000 agents working for us or more. If each of those is making micropayments or transactions on our behalf all the time, they're a lot smarter than we are in that regard. They can probably jump through a lot more hoops and deal with a lot more of this complexity and maybe do 27 hops for a given transaction if it's cheap enough without needing to like necessarily solve that complexity. Whereas for us, we don't want to worry about it. We want to go buy a t-shirt, swipe, and get on with our lives. An agent, I think, has a lot more bandwidth to deal with the complexity.
I definitely agree on that. And if you look at the trends of what's been happening when it comes to stablecoin adoption, USDT on Tron is the number one stablecoin. And just recently this week, USDC on Solana became the number, like the most used stablecoin or the most stablecoin supply on Solana. Like the most volume goes through Solana. I think it's because of the velocity of the blockchain. So what you're seeing is the trend is people want to send money as cheaply as possible at the end of the day. Like that's why Tron, yes, was the first to create the stablecoin USDT out of Bitfinex. But they grew on Tron much faster than on Ethereum because of the low gas fees. And so, you're telling me about what happens in a world where we have 10,000 agents that are all doing, 50 transactions a minute. It looks like what is going to break first is not the stable coin. It is the execution layer. And for us for Sphere, what we're thinking about is, how could we support the infrastructure for payments that are going to be in the billions to trillions per month or per year without breaking. And that is why we're thinking about the release of SphereNet to be something that is differentiated from the rest, where we see a lot of the people who are building permissioned blockchains in the ecosystem go with the EVM, which, to their credit, is the most robust in terms of the language and understanding and building with it. But the Solana virtual machine is the most efficient in actually scaling transactions to the level of which would be needed for that amount of transactions to be executed.
Chase, what say you?
Yeah, I mean, one of the themes is maybe like what payments will look like in a few years. I mean, we have a lot that we didn't have a few years ago in terms of infrastructure. We have a bunch of FIs throughout the world that are stablecoin enabled. I still think though number one is just like scalability. Even the networks today are just nowhere near. Like I kind of it kind of gets me frustrated when I hear that, like as if that's a solved problem. There's a long way to go. We need new networks. The other thing to me that's really not there is just privacy. I mean, it seems like we basically got to this point on sort of crypto native use cases, then inflation hedging, and then stablecoin sandwich. I mean, we like stablecoins have grown incredibly quickly to this point, but to still have basically no privacy. Today, mostly we're going to these permission networks that have their own problem. We have some bolt-on solutions with some existing token standards, but that feels like a very missing one today. And so I'm excited about a number of the newer networks, both on settlement time and privacy. I mean, it sounds like I'm sure SphereNet's thinking about a lot of this stuff as well. But I feel like with some of those primitives, we're sort of like finally there to take the next jump.
I think it's such a great point. Really quick, to build on that idea right there. In addition to like why is it so hard for these stablecoins to be interoperable? A very, very large part of that is because every financial institution has to adhere to KYC regulations in their local jurisdiction. So not only do you have to figure out the tech part, you have to figure out the regulatory part, and sharing that in a way that's secure, like with Coinbase having a hack that people now are getting phishing emails, and there are people who are getting, targeted because people know how much they hold. Like it's a huge problem, and something that, to your point, like hasn't been solved, needs to be.
I'm so glad that we meandered our way into compliance, because for our listeners, it's probably like the most boring thing in the world, but there's so much to dive into it. And I am really excited about it. Like, I think what most people don't realize, and all of you are payment companies, and I did that very specifically, or payment-ish companies. But what people don't realize is like DeFi tooling and DeFi infrastructure does not work for payments. Right? Like if you are a regulated VASP, if you are an MSB, you need to comply with like the travel rules. So moving between payments, you can't go and dive into, your standard uni liquidity pool or your Curve liquidity pool, or use, your average intent network like Relay, because you need to know who's on the other side of that liquidity. And you don't know if it's your neighbor or if it's North Korea that's on the other side of liquidity. And the DeFi space right now is like the Wild West, but it does not directly translate over to payments. So when we talk about tens of thousands of stable coins and needing to move between those stable coins, oftentimes that infrastructure doesn't exist yet because it's not designed for payments. It's designed for the Wild West of DeFi. And so I think that when we talk about like stablecoin innovation, there's almost a separation that you need to make between things that are, DeFi compatible, tools that are DeFi compatible, and then also tools that are payment compatible, because far, far, far too many of these tools were built for DeFi from day one, but simply are not designed for payments. And I know that for a fact that each and every one of you has specific licenses in specific jurisdictions, because we've talked about it. And the regulatory obligations that come to it really, really, really sort of narrow the type of tooling that you can use around stablecoins that were not built for that, niche purpose. And you guys need to adhere to that from a compliance perspective. And I think that, like, obviously, maybe this is an entirely different panel and different conversation that we have to have. But like when we talk about areas for growth, that area of like, hey, we need tools that are built for payments and not built for DeFi is one that I think is going to explode as more regulated entities start to come on chain.
Yeah, there's some pretty big companies are making a bet that is the case and launching, like I said earlier, their layer ones, not to name names. And I can tell you from personal experience, growing stablecoin adoption in my Paxos days, when you go to a new company and you tell them about your product and you're sharing yield and it's wonderful and everything is very appealing. That's one thing. But then you end up in a world where, like Angel was saying, you can't touch a curve pool if you're a publicly listed company. So you have to go on board, you have to go mint and there's a lot of complexity still there. And honestly, the value prop, product market fit, we all agree on it. But if you make the essentially end client, in this case, maybe a merchant, maybe a payments company in the TradFi world, jump through so many hoops, they may get frustrated. Nowadays, they're all looking at it, and I think, kind of like we were discussing, we will have some major players, issue their own stables and have all this infrastructure set up. The other thing is the resourcing, just on a human capital perspective. You suddenly find yourself in a world where every bank and every merchant and every payments company, they all need to have strong crypto native teams on deck, and I don't think that's a given. There aren't that many people that can go out and build those tools and those platforms within these companies. So I think there's a lot of room for third parties to come in and help.
Yeah, 100% there. Guys, we're T-minus like 4 minutes left in this thing. Is there anything that you guys want to touch on that you feel is really, really important for the audience to hear about when it comes to like on-chain finance and stablecoins? Any big announcements that you want to touch on for your respective companies?
Yeah, I'll jump in here, and this isn't necessarily CoinFlow centric, but I think for me as a marketer and looking at this kind of more broadly, trust moves at the speed of regulation in a lot of ways, but education's a huge point in this too. And I think, I think I read a study recently that was like 50% of adults say they'd consider using a stable coin, but when you actually take a look at that, really only about 15% of them really understand what it is or how it works. So it's going to be really important for us as leaders in this industry to educate buyers, educate users, educate merchants in what the power is here. And I think that's really where we're going to be focusing here, in addition to that regulation and compliance. These merchants don't have the time, space, or effort to be able to handle that. So it's going to be important on us to handle both that education and regulation and compliance side. So that's something we're really focused on, specifically in like remittance spaces, payroll spaces, and broader fintech. I think merchants in the e-commerce or marketplaces kind of understand it more because they're dealing with it every day, whether they're Web 2 or Web 3. But it's really going to be up to us as leaders in this industry to make sure we're going out there and telling the right stories and really educating why it matters as we move forward here.
Yeah, love it. Anyone else? Closing thoughts? All right, you guys make it easy. Well, for the audience, we really, really appreciate you sticking around throughout all of this. I'm someone who could have another 9 hours of conversation with these people because, like I said, they are the best and the brightest in the space. I highly recommend that you go follow all of these individuals, but also B, all of their companies. Like I said, if you are even moderately interested in stablecoins or payments or where they're going, these are the people that are paving the way to make that happen. And I'm very confident, if I was a betting man, that these 4 people are going to be the ones that are not just going to be hyped during the trend of stablecoins, but are going to be the ones that are going to be around and these massive companies in the next 2 years, 5 years, 10 years type of thing. So like I said, I appreciate everyone joining. We have another like 2+ hours of Fairgrounds Bonanza that's coming up. So stay tuned. For all of you panelists, really, really appreciate you coming. Appreciate your insights, and we'll all be chatting more. But thank you again.
Thank you.
Thanks, guys.
All right, here we go. I guess we're rolling right into the next session. Hey, everybody. How you doing? I'm Jack O'Haller, and I'm the CEO and co-founder of Scale Labs. Hey, it's awesome to have everyone here. There's some really, really smart people here that are talking today. We've got some interesting talks. We're going to be talking about agents, X402, stable coins, and also privacy. So I've got a quick 10-minute session for you, so I'm going to jump right into it. 1 second. All right. I am dealing with some tech. I am talking today about why privacy matters, okay? And talking about proof of encryption, all right? So why does privacy matter? We're going to get into that. We're going to talk about technical overview. We've got a lot of developers here, a lot of people that want to know tech. Going to get into that. I'm going to talk about use cases and what proof of encryption enables. Okay, so let's kick it off here. Why is privacy so hot right now? Okay, well, let's go back to 2015. 2015, smart contracts were hot. It was like, wow, you can actually have a blockchain that, and we had Bitcoin. All of a sudden, we had Ethereum. And what mattered was decentralization and security, all right? And it was cypherpunks, early token enthusiasts. These are the people that really cared, okay? Fast forward 5 years, all of a sudden proof of stake was the hot thing. And it was all about getting performance and cost down. Ethereum was great, but hey, it was really expensive. And that was we were serving DeFi and Web3 apps and Web3 gaming. It was a different world. Fast forward to 2025, proof of encryption and privacy are really hot because 1, agentic enablement, and 2, just mass adoption. We're going to get into a bunch of use cases. Why does privacy matter? Essentially to financial institutions and enterprises. That's the next group. To get to mass adoption, we all know we need real businesses using this stuff. So I like to call out, people are like, yeah, do I really need privacy? Let's go to the barista test. Someone else told me this, by the way, and I'm using it. I didn't come up with it. I thought it was really smart. And it was, hey, if you go buy a cup of coffee, do you really want that with USDC or some stable coin? Do you really want that barista to know do you want that barista to know what your account balance is? Do you want them to know everything you've bought before? Do you want them to know who else you send money to? No, you don't. You want that privacy in that instance, okay? And so privacy is really the next frontier. We're enabling individual private transactions, DeFi enablement. I'm going to talk about that in a minute. Next-gen banking, payments, B2D adoption, and agentic transactions, all enabled through privacy. Okay, really quick, what is it not about? Well, 1, it's misunderstood. It's not about supporting bad actors, anarchists, people who just want to get away from banks. Privacy and compliance are not mutually exclusive, okay? You can still have privacy and not, have the issues we saw with Tornado Cash and all these governments and bad actors using it to when they steal money. Privacy can be very compliant and be private, okay, and adopted by enterprises. And it's frankly a reality to get to mass adoption to be compliant. So how at Scale we're working on something called proof of encryption, open source product, open source software. Now most encryption techniques, you have a blockchain, and then on top of it there's this encryption layer, which you can see here. And then applications can choose, oh, should I use this encryption layer or not? And it's to date, it's always been a third party adding this encryption layer. The problem is when you do that, you add a layer between yourself or between the application and the blockchain. And what that means is it's extra work and process to set up, creates UX challenges, creates extreme latency, makes dramatically higher costs oftentimes, and performance and reliability. You have performance reliability issues. And also you open the door up to additional security vulnerabilities. All of a sudden, that blockchain is just processing it gets from the encryption layer, and whatever it says it's going to process because it can't see the information. It can just see the obscured information. And so all of a sudden, consensus plays less of a role in security. Okay, so next topic. Let's go look at how proof of encryption works. Well, proof of encryption actually encrypts the blockchain itself. Okay, so the validators can actually validate blocks. Nodes can validate without seeing all the information. There's no extra layer between the blockchain consensus and encryption. It's all coupled together in one system. Okay. It's not, you don't just have a blockchain and then some other third party that's tacking something on top of it. Why this matters is it removes all these performance issues, latency, reliability, and failed transactions. It's all works together. It's one system. There's no complexity. It works out of the box. There's no increased cost. And consensus is the only layer for security. If the consensus is right, it's going to be right. Okay. Now, how does this work? I'm just going to give a very high level. Other people will talk deeper about this later. I also encourage you to go read the light paper and the white paper and get on GitHub and read the docs. But Byte protocol is really the core ingredient. That's the core formula. And that stands for blockchain integrated threshold encryption. And then the subcomponents of that recipe are 1, BLS threshold encryption, 2, trusted execution environments, and 3, distributed key generation. These things come together essentially take transactions, encrypt them, then the encrypted transactions are sent to the nodes. Nodes then can run consensus, and then in Byte phase 1, it can be decrypted and put on chain. And that helps with removing MEV. Later Byte phases will actually enable the consensus to remain encrypted in a configurable way forever. So hence the barista tests and other privacy use cases where you want to be able to execute secure, valid transactions, maintain privacy around that account metadata. As I said, most other blockchains have a transaction. The node gets all the information, is able to reorder information, see information, data is exposed, and then consensus runs and it's added to the chain. I'm not going to go into all this math, but I want to say there's a lot of math here. There's a lot of complexity. Stan, this is some excerpts from the white paper. So Stan Kladko, my co-founder, our CTO, he and the team have just done a phenomenal job building this tech. Excited for people to go deeper into it later. Here's just a little teaser for you. I encourage you to go check it out if you are interested in cryptography, mathematics, privacy. Okay, let's talk about use cases. So number one, making MEV obsolete is a huge use case of privacy. So again, when nodes can see all the information in a block, they have the ability to reorder that information and use it and do it to their advantage. And they run bots that say, hey, run this bot, it's going to make you a bunch of money. And who does that money come from? It comes from other people. Other people are getting less of what they would have gotten had you not have had that MEV as part of the equation. And so if you look at this, the people say, oh, MEV is great because it just adds all this more revenue to validators and to blockchains. Well, the reality is it's being extracted from somebody. It's literally in the name, maximal extractable value. And when you have that, then all of a sudden you just limit the functionality because other things won't work. Now, CLOBs and limit orders don't work. You can just front run these things right and left, okay? On-chain indexes don't work because you have to rebalance indexes all the time. Why don't we see a ton of indexes in DeFi? We don't, right? There's been a few, but they don't run very efficiently because they have to rebalance. And every time they do, they just lose. They get slippage. They lose. It's hard to run them at scale. It also helps with enterprises, agentic AI. Now, agentic AI is interesting where an individual might make 1 to 10 trades a day or a week or a month, depending on who that individual is. It's not usually that much. But if that individual then says, hey, agent, I want you to help me make these trades, well, they can get up and running. And that individual might do 10,000 trades in a month. And what that means is if you're losing, a fraction of a percent on every trade or 0.5% or 1/4% or some amount, well, that doesn't matter if you're doing 5 or 10 trades. But if you're doing 10,000, that cumulatively grows in value. It really eats into efficiency for agents. Okay. The last thing here is we enable an advanced encrypted on-chain logic. So you can have more logic on chain. So you can be more atomically connected to DeFi decisions in the smart contract itself, as opposed to needing to have some off-chain system that's going to do if-then scenarios and try to send information that really can only be capitalized on the next block. In summary, MEV, in our opinion, really breaks DeFi and finance. It punishes AI agents and it blocks enterprises. All right, so talking really quickly about some additional use cases and opportunities. One, neobanking. We think neobanking is a huge area. Again, the barista test. If I send you money from my bank account, do I want you or a business to know exactly how much money I have in my bank account? Well, right now it's almost impossible to do that. Even if you use these intermediary accounts to try to do sends, it's really difficult to maintain privacy when you expose all the information on chain. So in order for neobanks to work at scale, we need privacy. For B2B enablement, there's so many use cases where privacy matters. To have global payments with privacy, that's a huge, huge opportunity. We also can enable compliant private trading and prediction markets that can operate without front running. The last piece here I want to talk about is X402. This is just a little teaser before Sawyer and other people talk about this, but X402 is an internet native protocol for payments. And the cool thing is this was built a really long time ago, and it's just never really utilized. In the internet protocol in HTTP, there was this 402 status code that enabled you to have payments integrated with the logic of the internet, but it wasn't ever useful because we didn't have cryptocurrency. We didn't have programmable money. And so why does this matter? Well, think of all the use cases where privacy matters. And again, here's our buddies here, the baristas, they're back again. Well, in the future, this is not a direct analogy, but you get the point. You also don't want all the robots and all the people that look at the robots to know what you have. Okay. So as X402 enables mass agentic trading and automated payments online, privacy is going to matter even more. Okay. So we're at a new frontier. I think it's exciting. I only have 10 minutes today. I'll be hosting a panel later, but thank you, everybody. Really appreciate it. Here, you can follow me at Twitter. And if you have any questions, just throw them in the Twitter feed. Thank you.
I think everyone can hear me. Let's see if these slides will pull up. One moment. I think they're loading. Awesome. All right. While they load, sorry for the delay. For those of you that don't know me, my name is Sawyer. Oftentimes seen throughout the Twitter sphere and the Telegrams, Discords, and all that good stuff as the Great Axios. I am Scale's VP of Developer Success, as well as one of the lead community developers. Honored to be here today. I'm going to be talking about X402 and the future of agentic finance. However, my slides are very slow right now, so apologies for that. While we wait for those to load, what I would like to call out is that perfect timing. Over the last 6 months or so, we've seen some incredible innovation in the agentic space. And that all starts with X402, at least from the blockchain and agentic side in my eyes. And what that comes back to is, well, what is X402 and why does this matter? So X402 is an open protocol brought to the world from Coinbase, as Jack just briefly mentioned. It is a protocol built on top of the native internet HTTP protocol using the what was previously kind of dormant 402 status code. So essentially what that means is you have a website or a web server. It goes to make a request to some other resource, and it gets a response that says, sorry, 402 payment is required. And so what that allows us for is to actually start to build agentic and automated payments within existing infrastructure, but start extending it with blockchain, okay? And so what's nice about this is it is blockchain agnostic, which means it can work across every scale chain. It can work across Fair as well as many other blockchains. And I think the most important part that everyone is very excited about these days is that it is payments at the speed of blockchain, which opens up a lot of opportunities. Now, I have an example in front of me because I think Jack stole my example. So I tweaked my original one and I made it something I think more relevant to a lot of the potential developers listening, which is an agentic coding example. Why does X402 matter? What does it do for us? there is this really cool protocol web application called Firecrawl. And what it does is it lets you put in a website, documentation, whatever it may be, and it basically goes, scrapes that information, and pulls it back into LLM, large language model ready information. Now, this is normally something that requires an API key or credential, right, payment proof, things like that. But what the Firecrawl team did was they actually implemented X402 natively. And so what this means is, that's me, the little alien guy over on the left side. I'm using Cursor. Oh, hey, Ben. I want to fix my smart contract. When I fix my smart contract, I make that request in Cursor, my agentic IDE. It's essentially going to an agent, right? I'm not actually typing that code. I'm saying, hey, there's a bug. Please fix my code. Now, what that agent is doing is actually making a request out to a tool. The tool comes in the form of access via MCP, which is Model Context Protocol, something from the Anthropic team that's been standardized across much of AI at this point. And essentially what happens is it makes this request to the MCP server. Now, the MCP server responds with or takes that request and actually goes out and tries to get that information. Before it does that, though, it responds with a HTTP 402 payment required. That is where X402 actually comes in. I then have to have my agentic agent in Cursor have access to a private key, which is very doable these days, to have stablecoins or tokens or whatever X402 will accept and actually make that payment behind the scenes. Ultimately, what that means is we have the ability to turn any agentic capable system, autonomous system, coding system, generative system into something that is able to accept payment on the fly, not require traditional API keys or authorization, which is really a big step forward for the internet. Now, all that's really exciting, but I do have to make sure I call out all of the exciting contributions that the Scale ecosystem and team has been making to X402 and why we think this is so valuable. Great work by Stan, CTO and co-founder on Machine Pay. I've made a number of contributions to Corbits, to the Farameter open source implementation of X402. And we've been involved with a lot of, how do we make this work across different chains, getting involved in the different specifications, things like that. So a lot of really good contributions so far, excited for more. And you can quickly see here a lot more around, encrypted X402 transactions with Byte. I'll touch on that momentarily. And we're getting pretty deep into some new research topics as well around both X402 and the broader agentic world of trustless agents. Now, this is ultimately a live event for FAIR. And I think it's important to call out that, as Jack mentioned, we have this thing called Byte Protocol, right? Byte Protocol, blockchain integrated threshold encryption, is the ability to make transactions, future payloads, and even the entire state of the blockchain encrypted and confidential. And what that means is we have the ability, which I actually tested this last week, I think it was the first one ever, to do confidential encrypted transfers, right? And so what this means is I want to go and pay for some resource. My agent wants to go pay for some resource. That resource is X402 enabled. We can now make those payments confidential from end to end with Byte Protocol. So, yesterday we had basic transfer with authorization, the ERC 3009 standard, which is fantastic. But today we actually have the ability to do confidential encrypted transfers, which is incredibly exciting. And I think a big step forward for the industry. Now, moving a little bit forward, right? Because X402 is amazing in and of itself, but there's this broader world of agentic opportunity that I think we're really starting to see grow. And I know I've been very technical so far, so I'm going to bring this back a little bit higher level. ERC 8004 is another open protocol. It actually extends the agent-to-agent framework, which is from the Google team. They donated it to the Linux Foundation, if I'm not mistaken. And what it does is it actually brings discovery and interaction of agents on-chain. And the reason for this is we have a lot of people trying to build agents, but one of the hardest things to figure out is how do we connect these things securely in a way where they can trust each other, right? Or maybe not trust each other, but trust that the execution is going to be done properly, the payment's going to be facilitated, et cetera. So they've actually brought a spec together. And this is from a bunch of different people across Ethereum, I think MetaMask, Coinbase, Google, to figure out how to actually do these trustless agents, right? And it actually extends or consumes X402 as a way to make those payments. Looking into that a little bit deeper and why it's so relevant with Fair, I think, is because we have this, future of what is the future of finance, right? And I think we're seeing this very big and dramatic shift, slowly but surely come to privacy, confidentiality, encryption. And if you look at these protocols, they call out, as you can see, things on the screen. I'll read them relatively quickly. Incentives and slashing and validation are managed by validation-specific protocols. How do we actually stop spam, right? Things like this. And I think the answer to me is very straightforward. We utilize Byte, right? We utilize this ability to send encrypted payloads, encrypted transactions, and we can, very quickly start to solve a lot of these issues just by using the right technology at the blockchain level. Now, these are just some screenshots from that standard. I'm running a little bit short on time, so we'll skip through these. Overall, kind of recapping all of that, I think what is most exciting to me, and where I'm very excited that not just the Scale ecosystem, but the broader blockchain ecosystem is really going, is we're seeing this big shift toward not just human-enabled finance on chain from stable coins and TradFi coming on chain, but we are seeing this shift in growth across X402, agentic protocols, agentic payments, autonomous agents, things like that. And I'm just very excited to see where it goes. So thank you for allowing me to spend a few minutes sharing some of this with you. We'll be back in just a couple of hours for a deeper panel on autonomous agents and X402. So we'll see you then. Thanks so much.
Hello again, Sawyer, Jack. Thank you for the great presentations on Fair and proof of encryption and machine payments. Next up, we're going to have a conversation about DeFi innovation. We're going to be joined by Connor Murphy, the Scale Labs VP Strategy and Head of Sales, Vladimir from Algebra, Juan David from KeyRock, and Jordan Hyken from the Scale Labs team as well. So in a moment, I will be adding these people. Let me go ahead and bring everybody up on stage.
Hey guys, how's it going?
All good, all good.
Hello, everyone.
Nice to be here.
Yeah, excited to have you here. I think we're waiting for Jordan. Let's give him 1 second. How's your guys' day going?
All good. For me finishing, but yeah, great.
Got the global community across it. All right, well, I'll kick things off, and I'm sure he'll join partially the way through. But welcome, everyone. Excited to be here. First and foremost, thanks to the panel members for joining us. I'm excited to host this conversation. Ben did it, but as a quick intro, my name's Connor. I run sales and strategy for Scale Labs, core team. And we've got a great segment lined up. As Ben mentioned, we'll be covering the evolution of finance and really how traditional finance rails are coming on chain. We'll take a quick glance of where the landscape currently stands. And I think more importantly, start to look into the future and dig into what that journey entails. We've got a bunch of experts here. As well as Sawyer. I'll give you the expert title. So we'll kick things off. Maybe first, let's go around the horn. Could you just give a quick intro of yourself, what project you come from, and then we'll get into questions after that.
Should I start? So my name is Juan David. I'm the founder of KeyRock. KeyRock is a large-scale financial institution in digital assets. We do everything from structured products to market making to over-the-counter trading, and are one of the largest HFT traders in the space. I guess my tagline for today is all price discovery moves on chain in less than 10 years for all assets.
Next one. Next up. Do you want to give a quick intro?
It's for me.
Yes.
Okay, cool. Okay, hello everyone. My name is Vladimir. I'm a co-founder of Algebra, and Algebra is technology for decentralized exchanges. I think the most popular right now in DeFi space. We have more than 100 DEXs built on Algebra, and TVL is about 250 million. And big names like QuickSwap, Camelot, Tina, Black Hole on Avalanche, and many other DEXs choosing Algebra for building a DEX. So I would say, in simple words, we are Uniswap. Can you hear me? Oh, that's fine. Yeah. So in simple words, we are Uniswap, but focus on technology mostly, not like on audience. So we try to deliver the best DEX ideas, algorithms to the existing DEXs, and also launch our own DEX on promising blockchains. So that's what we are doing.
Thanks, Vladimir. Sawyer, how about a quick one?
I'm back in case you guys missed me. I will be subbing in, so sorry about that if you were coming for someone else. But very quick reintroduction on my side. My name's Sawyer. I'm the VP of Developer Success at Scale, as well as one of the lead community developers, and I build a lot of different stuff. So I think I'll be able to hopefully hold my own with these incredible individuals on the panel today.
Yeah, this is exciting. We've got experts across liquidity, the backend stack, complete OGs of DeFi, and then a developer, one that has supported a lot of the DeFi community here and other networks too. So I think we'll be able to dig in and have a fruitful discussion. All right, well, let's start with an easy one. Juan, we'll start with you, and then we can go around. How would you describe the current DeFi landscape today? Kind of, what have we achieved, and where do you think we've reached maturity so far?
I mean, maturity is never reached, correct?
If at all.
We're always gonna continue to improve, make things better. But basically, we got to a very interesting state of the market right now. Like if you look at a lot of the things that we were excited about over the past 5 years, that people kept on thinking that they're gonna happen and they didn't happen. Thinking about RWAs, thinking about tokenized equities, thinking about the money market Lego. All of those things are actually happening now. Yeah. And my thesis is that they're happening because money markets as a fundamental pillar of digital assets have figured out how to, in a scalable way, provide leverage to more than just Bitcoin and Ethereum. And so we're right now at the point where money markets have served as the infrastructure that builds a value proposition for other assets to be better when they're tokenized and when they're not. Because ultimately, that's what matters, correct? If you tokenize something and it's not better than its alternative, why would people use it? Yeah. And so for a long time, why would you tokenize a money markets fund if you can use it for anything, correct? So you want to add utility. That utility now exists, and I think the recent explosive growth of RWAs is actually mainly due to the maturity of on-chain money markets and the great work of companies like Morpho or Maple in the space.
Agreed. Vladimir?
Okay, so I'm more DeFi guy. So it's I think that 2 years ago, when we tried to push like DeFi, it's like people say, okay, it's like meme coins, it's like maybe NFTs and maybe DePIN. And I'm really happy that right now it's a lot of talks about DeFi renaissance and about that we feel that there are a lot of chains, a lot of ideas coming to DeFi space. And we see a huge amount of money locked in lendings, in new protocols like Panda, for example, and many others. So I believe we break a wall, and now we got a trust in the industry that DeFi can be used by big players. It's by institutional guys, by governments, and so on. So I think that's a great change which we achieved during the last year.
Yeah. Sorry, do you have anything else to add on that?
Yeah, I would just say I think we're at a really interesting point where I think we're seeing things mature from an access perspective, and we're starting to see the I think like I always bifurcate between like the blockchain world and the real world. We're seeing the real world start to say this is actually an opportunity for us. And I think probably the two best examples, one I already called out, is the amount of money locked in lending protocols, incredible. And it's getting easier to use now that you see, exchanges like Coinbase allowing access to that through their exchange. Whether you like the idea that people are using the exchange to do it or not, like, hold your own tokens and all that is one thing. But I think just the access is big. And I think more so on the TradFi investment side, right? We just saw, Polymarket raise $2 billion from the owner of the New York Stock Exchange, right? And I just think that shows you that the market is starting to mature to the point where the real traditional finance world is seeing the value and they're trying to figure out how to capture it as their own, which again, I think is starting to show that maturity.
Yeah. Metric. Oh, go ahead.
I just would like to add that I think we should not ignore Hyperliquid, because it's for us, like for DEX perspective, like Binance and Coinbase are almost TradFi, I would say. So it's like centralized stuff with big players, with professional market makers. While on chain, I think it's like the first real big example when we feel that centralized trading could be done on chain, and you see the results. So I think that's also a great step to show that it could be done on chain with trust, and we see that's how it changed. And the next step, it's connect this exchange with DeFi protocols. So we could expect even more growth, because you can imagine that if our liquidation will be automatically done in Aave by Hyperliquid, it will be a new era in DeFi.
Yeah, I totally agree with what everyone said. I think, maturation, I think, is a different word for everyone, and people have different scales of it. But I look at it as more of kind of segments of time and big steps. And I definitely think we've completed at least that one large step. And you have that kind of DeFi 1.0 class matured. And I look at just crypto in general as like a principle, as three kind of main things. You're either minting, you're moving, or speculating. That's what we've really proved out. You're minting assets, you're moving assets, or you're speculating on them. And DeFi has shown that it can support those three critical areas. And you have DEXs, specifically like the Algebra team, you have lending protocols, and then you have more of the trading apps like a Hyperliquid, all reaching maturity and security. I think the major lending protocols, the amount of money that's in it and how lindy they are right now, they feel fairly safe, and famous last words, right, in crypto, fairly safe. But we see crashes all the time, and they hold up, and they hold up better than the traditional finance world, which is incredible to see, and which is why I'm really excited to now take that next step, right? It's the building blocks are in place, the ecosystem's there to support it, legislation is now behind us as a tailwind. Now, how do we actually innovate on these building blocks? Because to this point, I think there's been types of innovation at the edges, but for most, it's been becoming par to traditional finance. Maybe it's more capital efficient, maybe it's more accessible, but it's a little skeuomorphic, where it looks like the old world, but just in a different way. What I'm really excited for is how are we going to push this forward, and how does this composability unlock everything from there? So I think that leads me to my next question: is where are we currently constrained right now? What's blocking DeFi from taking this next major step? And then is there one of those things that's, initially most solvable out of all those blockers?
I can answer this one. So Connor, I think that's a great question, because if we're talking about the DEX side, if we look to Uniswap v4 with the hooks ideas or algebra integral, so right now we can do anything with the pool. So we can stop trading, we can change fees, we can even rebalance liquidity in the pool. So everything. But the problem, we do not know how to do it right. So that's really strange situation. So our technology is at the level that we can control everything in trading, but we don't know how to do it. And I think that's the main blocker for us. So we have a lot of data, but we don't know what's conclusion, what we should get from this one. And that, I think that's, I believe, especially for scale, so it's connected with the AI. So that's, I think, the next step for us as a DEX to understand how to analyze this data and adjust our behavior to capture the max value thanks to this data. So that's at least what's a blocker for DEXs at the moment. So we can do it, but we do not know how to do it.
Interesting. Yeah, it's good to see that. Juan, any other thoughts on that?
Yeah, so I mean, look, I think I might have a couple of opposite opinions on this one, but when you look at institutional adoption right now, I think I've been starting to really make sure I keep a split mind between what are financial institutions and then institutionals. And I think, right now, majority of people are putting both in the same bucket, but they're not the same, correct? Like financial institutions are moving on chain. That is very evident. You have, the BlackRocks of the world interacting. Majority of banking institutions are opening accounts, many of them even with us. And they're coming in, correct? But they're coming in not in the capacity of allocators. They're coming in the sense that they see an opportunity and they wanna have a piece of the revenue that comes from it. But majority of the capital is still retail, actually. So at the moment that level of institutional trust, in my point of view, is not there. All of the research that we have done related to on-chain asset management seems to indicate that majority of the capital on-chain allocated to vaults in the industry is still not from institutions. Institutions are there try to make money out of the situation, but actually majority of family offices are still not convinced about the risk-reward ratio to allocate to smart contracts or the obfuscation to counterparties that might explode. Which takes me to what are the two things in my mind that are really missing for this to be solved. And one of them is really kind of like as simple as it sounds, which is insurance. Like there's not been any real capacity for large scale insurance where people can confidently allocate to innovation. The only thing that managed to have insurance are things that are already very lindy. So kind of like defeats the point. So yeah, you might actually find a way to insure against Aave in the main pool. But that's not the issue, Greg. The issue is you don't have institutions wanting to experiment or interact with new paradigms very quickly, correct? So it takes very long time for those paradigms to become, like you say, lindy, for them to be to kind of like have enough years of track record. And so kind of like time is the only thing that plays in our favor as time goes by, that kind of like serves as an insurance, but it is really not. Yeah. And then the second thing is what I typically call the Apple Store effect, which is at the beginning when the smartphones came out. And I don't know if you ever had an Android phone before, but back in the day, like Web 2 applications, they used to be scary. People didn't want to put their credit card details into a Web 2 application, right? Because they felt like they might steal my credit card details and then I'll lose all my money. Mm-hmm. Or the app itself is a scam, or it has a virus or whatever. Yeah. And that only lasted a few years, actually. It got to a point where the Apple Store and the Play Store, they started to kind of like realize that they had to actually serve as an auditor to the publishers. And right now, because of the way that the blockchain industry works and how amazingly decentralized it is, there is not really any brand that is powerful enough or trusted enough. I mean, we have a bunch of these auditors, but they are not lindy whatsoever. The only one that know those auditors are the geeks in the industry, correct? So you might know of the great work of Zeppelin, but the reality is that majority of people don't have a clue, what they are, or why to trust them. And so there is no like a single point, like an app store, where you would say, okay, if something new gets published there, and because of that, I trust it. As a matter of fact, like the fact that a new application comes into Ethereum, for majority of people, it's just scary. It's like, oh fuck, it's just going to explode in the near future. And so kind of like that idea that you start to have like that Apple Store phenomenon where things are inherently trusted, even if not proven, is still needed for those institutions to come in. And insurance is part of it, but also kind of like really a systematic process for publishing and auditing quality, which does not exist really.
David, can I ask you a question? So, it's in our DEX world, we feel that retail people start be united by vaults which are managed by professionals. So yes. Let's say, so you feel the same. So I think that like for retails, I would say they unite their liquidity, combine their liquidity with others, which is managed by professional, like institutional guy mostly.
Yeah,
that's what we see during the last year.
Yeah, exactly. And that's why for me, it's kind of like, like a good paradigm shift to start thinking about it as financial institutions versus institutionals, because it's very interesting for a financial institution to enter the market today. I mean, like billions of dollars are being allocated to on-chain vaults. But when you look at the numbers on asset management outside of the on-chain world, these allocators still allocate very little to on-chain strategies. I mean, they almost not.
Mm-hmm. Do you see that being do you see that unlock being a time thing where we spend X amount of years and then people become comfortable just because of the amount of time, and maybe they have colleagues or other folks that are innovating at the edges that are getting at it? Or do you see it as a amount of money that comes into it and more of an innovator's dilemma, where there will be either smaller institutions or smaller financial institutions that will take the risk trying to leapfrog others, and they'll get to a point where they've got to play catch up? Or maybe it's a combination of both. Like, I guess as you've spoken with these folks, what is the hesitancy there?
Yeah, I mean, I think a lot of them are now starting into the products that are more simple, so simplicity is king. I think that, if you look at the things that are working, the most simple stuff, correct? If you think about it, like, money markets, V1, very simple stuff that had enough time to prove itself, but it's very simple, correct? And so we tend to, there is majority of the narrative of innovation right now is going on, agentic finance, which is great, correct? But the more sophistication you bring and the more complicated it is to understand, the more scary it is, correct? If people don't even trust a smart contract today, it's going to be pretty hard that they trust 5 smart contracts with an agent that is moving money between them, correct? They might not trust that very quickly. And so I think all of those issues, they ultimately get solved through innovation. Like I really think that, again, the reason that RWAs started to come on chain is not just because institutions started to move. It's because there were new primitives and new financial models to allow for those things to come on chain in a more safe way, correct? Like if you think about the evolution of money markets, where Aave has this fantastic system, and then Morpho comes in and says, hey, why don't we bring a third-party risk curator in the middle that can also start doing a job to evaluate if these other assets should be served or not as collateral? And then Pendle comes in and they say, actually, we can start splitting the principal from the yield. And then, funny enough, those two things together independently, correct, two complete independent innovations, it's actually the reason that all of a sudden made sense to bring these assets on chain. So most probably it's going to be about the same. I mean, I think somebody's going to figure out how to do the whole insurance piece in an effective way. I've seen some startups trying to do it, and something is going to stick there, but nobody has really got it completely right. It could be maybe through the restaking technology and using that as a mechanism for insuring at a low cost. But to be honest, it's not so straightforward. So I'm not going to speculate that I know what the answer is, right? But I think it's going to be somebody's going to come up with the idea that unlocks that piece there. But I think at least on you see money market funds, I mean, it's already working. Yeah, it is.
Yeah, I think one thing that we're really excited about, specifically with Fair, since Fair has proof of encryption and encrypts transactions at the consensus level through BLS threshold encryption, it actually allows for a lot of these money markets to happen on chain in a confidential way. I mean, you think about it, especially once you get into corporate debt structure and the top 500 companies in the world, they don't want others to know if they're making investments into certain companies or into certain commodities or crypto, or lending out a certain amount of money. That can be risk involved, as well as just strategy on chain. When all these corporations are so competitive, when that intent leaks through a mempool, it could be devastating and you lose your edge. So I do think a lot of that is going to come from encryption pieces or some type of privacy preserving elements. And that's something that we're really excited about, kind of innovating on the edges right now.
Yeah, you could have also once you start to have these encryption mechanisms, then you can have for example, third-party stamps that or maybe CK proving in the middle, where you say, okay, you cannot see what it is, but I can assure you the money's there, correct?
Right.
and that connected to some kind of like mechanism where it still feels and looks like DeFi, but you just so you know the money's there, you just don't know what it's doing.
I definitely think as part of that, I think a big piece, and I think you kind of said at the beginning, I think a big piece is probably both for institutions from what I've kind of heard and been talking to, as well as from just more like normal, regular people who are kind of your retail crowd. I do think the biggest thing is simplicity. You can have the most complicated protocols behind the scenes, but I think 9 out of 10 people are always just going to go towards simplicity. Like, not financial advice, but you ask the average person on the street, like, hey, what should I invest in? And like the majority of people at this point, at least in the United States, respond with, oh, just invest in the S&P 500. Like, that's just easy, right? Like it averages, it goes up, right? Market goes up. And so I think it's really interesting because there are ways to functionally make more money if you know what you're doing, but obviously there's more risk involved. And so I think it's an interesting thing around when we start to look at DeFi is how, like, all the innovation occurring, how do we make it simpler for retail and institutions? Because I think you can build as complex of a system as you want behind the scenes with hooks and with, making prediction markets, perp dexes, all this leverage trading. But at the end of the day, most people I think are still just going to be like, take my money and make me money. And if you can do that, I'll give you my money. And I'm willing to pay a fee to make that happen, even if there's mountains of complex logic happening behind the scenes that is intangible to the average person.
Yeah, so hear me out on this theory. You're going to like it. So in crypto, majority of people that have been doing this for a long time, let's say you, are generally early adopter type personalities, correct? You like to experiment, you like to do stuff, and you started to trade and like use all these systems and try the V3 engine of Uniswap early on. And then every time a new protocol comes in, you go and you play around, and we all been doing that. Yeah. And then you see about something like, let's say it's only like 8 months, 10 months from now, there's this massive explosion of TVL into managed vaults. Like you said, like giving money to others to manage. And it kept me thinking, what the fuck happened, correct? How come that all of a sudden everybody wants to give their money to somebody else, And so it could be that either people that just want their money to be managed coming in and they're just using the technology for that, or all of us just got tired of losing money, because the reality of it is that we were just for years doing stupid shit. And then all of a sudden now, all of the crypto people that started early on with me, sometimes you made a lot of money, sometimes you lose a lot of money. And then maybe now they're getting to the point where they're saying, actually, I made enough money, but I'm definitely not better than if I just went long Bitcoin since the beginning, correct? So why don't we just do that? And we do the S&P version of that in crypto would be like the vaults, correct? Like just put the money in the vaults and
exactly
with the care of it.
Exactly.
Yeah, if I could add, so it's one of the reasons why people use the vaults, because if you have a vault, you can come to a protocol and ask for extra benefits because you have already a lot of money there. It's what we see right now in DEX space. Previously, you have to launch a token which which you send rewards to people who provide liquidity, like liquidity mining. Now it's more about like OTC talks and say, okay, if you give us 100 million, we will give you 15% of our token supply to vault, something like this. So I think that's also a reason why we see that like more and more vaults appears and appearing and so on. So that's much more easy to protocol to get initial liquidity and for people who provide to get extra benefits thanks to this one. And also, regarding that, you have already mentioned about simplicity of protocols. I think that almost every protocol right now have two versions, like Pro and for beginners, because there are two types of people. So like crypto guys, it's today I have demonstrated we have new design for DEX, and one of our engineers say, "Why is this? I want to see APR and that's it. I don't care about the color. I don't care about like how it's what's about markup. I don't care. Just show me APR." And that's it's pro users, they don't care. Or if you see like Curve design when it was launched, it's what is this? And for people like who just come to crypto, of course they're shocked. And for them, we just need to create a layer of good UI of understanding what's going on.
Yeah, I think it's interesting because, a couple of comments to some of those things. For us who are terminally online and trying everything, it's even hard enough to keep up with what's innovating. And it's even difficult to figure out, okay, what are these levers I can pull? How much time do I have with that? And I always joke with my buddies that I've turned into a little bit of like a boomer crypto person because I have gone back down the risk curve, and compared to the 2016, 2017 days where I was just full porting into, BitMEX and Binance. And
You're the customer now. Great.
Yeah, and it's interesting is, how does that compare to, kind of broader retail adoption? And does this mean that, to Sawyer's point, a lot of people are in, SPY, they're in some type of ETF. Does that completely come on chain? Where do you guys see traditional finance and on-chain finance either converging or competing? Do you think there's because, we've been talking about some of the hesitancy of coming on chain. Do you think there's elements that just never come on chain because of either insurance or, fear or just confusion? Or do you think it's kind of an inevitable that the rails will fully transform?
I can allude to that if you want.
Of course.
I've been thinking a little bit about, like the basic answer of that is everything, ends up being one. That's like the basic answer. That's what you hear around. Now, how does that happen? That's the hard part of the question, correct? And I don't buy that it's as simple as everything gets tokenized into basically Ethereum and Solana, and then it ripples to all the other chains, and it kind of like goes into this happy path. I don't buy that. I think what ends up happening is the financial institutions start using the technology, which is the stage in which we are now. They realize that there is value to be had from this technology, and they realize that the value capture is at the network level. And at that point, they basically gang up to try to own the network. And so we first go through a phase where they accept that the world is going on chain, but that doesn't mean that they accept the chain as it is today. And then basically they start doing this parallel world where traditional finance starts tokenizing everything with kind of like a strategy to have a customer acquisition strategy where customers are. So you want to reach out your customers from, the hubs where majority of those customers are today, let's say Ethereum. But for your existing clients, you don't have any incentive to like push them to go to Ethereum. You want to push them to go to a middle layer technology where you can monetize the network, correct? We've seen some kind of like versions of these, so like Cantor, correct? And basically where you would say, okay, you would have these new chains that come in, and all of a sudden you'll see that they have an enormous amount of financial institutional investment into them. And it's kind of like a reflection on them accepting that it's going this way, but not accepting that they missed at the early on and trying to kind of like play it back. I think ultimately it does not fly, it doesn't work. And in the long term, it does end up slowly but surely converging into the place of price discovery being the chain, correct? And ultimately we end up or at least my view is that we end up in a world where all of the financial, the chain or DeFi serves basically all the financial backbone of all banking. And so all money markets goes on chain, all rates go on chain, maybe later on mortgages go on chain, and at that point, kind of like all of finance is DeFi based, and then you just have like a layer of interaction where creativity and innovation can be built on top of those pillars. But that is in theory not great for the incumbent, and so that pushes them to kind of like try to get there through a parallel route. Yeah, if you maybe a parallel to explain how that works, we actually have an example of that already outside of Web3. I mean, for those of you that will know a little bit about banking regulation in Europe, in Europe, there's already something that is called the Open Banking Protocol. And this was something that is actually relatively recent, where the European Union forced all the banks to have exposed APIs. So it's actually by law. They cannot not have it. And majority of the very aggressive explosion of fintechs in Web2 came from the fact that banks were forced to give you data, correct? So all of a sudden you have like any bank can build a UI on top where they can connect to the API of ING or BNP. And then all of a sudden they can build a fintech around another added value service, but you can also see your balance of your account and make transfers from that account, okay? Now imagine a world where DeFi actually does all of those things. You basically have that on steroids, where all of the financial get abstracted, and basically the chain serves as a mega API for any creativity founders to build on top. So hopefully that's where we get to. But I do think in between, we're gonna have a lot of these kind of like parallel chains being created to try to capture value along the way.
Right, and yeah, you can see that right now, right? You can see that with Stripe's Tempo, Circus Arc, like you mentioned, Canton, Connexus, these other different financial institutions that have private blockchains, or these combo private or public but permissioned blockchains. Yeah, I think we'll have some stumblings along the way, but I fully believe that to hit the point of composability, you need to have those entry points. Across.
That's the way that they compete, you see. So it's not that it would be kind of like traditional technology competing versus blockchain. I think we're getting to the point where everybody knows that that's already like a lost battle, to be honest. But that's the type of competition that we're gonna see.
Yeah, agreed. Well, it's been a great panel. I want to squeeze one last question in, just knowing that we're coming up on time. We've talked about kind of the current state. We've talked about some blockers, but let's make it a little bit more fun. When we look forward, what does DeFi look like in, let's say, 5 to 10 years? You can pick either 5, you can pick 10, but when it makes that next maybe 2 steps, major leaps of innovation, crosses the chasm, we have adoption. What are some bold predictions of a world that you see coming? And there's some early signs of that too.
Okay, so it's I think from our perspective, and add to a previous question, so we believe in wallets. So it's like one application where you can manage all your like traditional finance and crypto in one place. And it's, as already discussed, so right now we have so many information, so many data, so we expect that it will be quite easy to get answer what you're looking for. So let's say I would like to get, 10% in APR in stables, or like in dollar, and you'll get options in TradFi or in crypto on one place, and you can decide. So I think we need to simplify what we could provide at the moment, and it will be a really big step. And also have one applications like Neobank with all crypto and traditional finance connected. So that's what we are personally looking to in the future. So because right now it's so complicated, as you already mentioned, so many chains, so many liquidity fragmentation, and it's human brain is not enough to understand everything and how it's connected and how to get the best revenue for this one. So we expect it will be like super up. I know like WeChat maybe in China, but for finance, everything in finance. So that's, and it's bad that like a lot of chains are coming. So it's not about you guys, but in general, like the USDT launching own chain, like Coinbase, everyone. So try to capture some value from this one, but it's okay. I hope that we will have maybe like 3 or 4, 5 chains in the future, which will be all liquidity are there, and it will be much more effective at the moment. So less chains and super app for managing your finance.
Nice. Juan?
How much time do I have?
Not much, but we can let you go over.
Okay, let me see. when I so building on the concept that I was explaining on this idea of kind of like pillars of finance for creativity and the capacity to build anything on top of that. That's ultimately where I think DeFi ends up. But what's important is what does that mean for society and what is the impact that it has, and I mean that's at least what drives me, which is that I thoroughly believe that today we live in a world where every basically country is kind of like an economic bubble. You could visualize it. You have like hundreds of these very segregated economic bubbles, and some people in the world are lucky enough that they have the capacity to arbitrage between these different economic bubbles. They have the wealth and the capacity to take advantage of the inefficiencies between all of these markets, but majority of the people in the world, unfortunately, are not there. They are constrained to the economic reality in which they live in. And if you're born in a place where to buy a house you need to pay a mortgage 15%, that's actually gonna determine majority of your capacity to be financially free in your life.
Mm-hmm.
And I'm not talking about poverty in Africa. I'm talking about just people that are living good lives. The majority of the bulk of middle class in the planet, they don't have the capacity to do much outside of the financial constraints that their own country enables them to do. Even between the US and Europe is extremely different. And then you have, I'd say, people like me maybe that can understand those systems and take advantage of them. And I can borrow money in one continent or in the other. And in a world where DeFi gets to really be the rails of finance across the world, all of a sudden this goes away, correct? So it's for me, it becomes the ultimate equalizer. When it happens, if it happens, it's the ultimate equalizer, correct? It becomes fair game, and everybody from anywhere in the world, if they work hard, they can try to achieve the same. But today is not, because you cannot get access to the same quality of financing, you cannot get to the same quality of debt, you cannot get a quality to the same quality of venture capital.
Yeah. I agree with both of you guys. I think like how I'd probably summarize that is access and optimization. I think like overly simplified, but how do we give access? And the original goal of Bitcoin and crypto was banking the unbanked, right? How do you do that? And then how do you optimize from there? That's what we're focused on FAIR. We believe in a world where encryption unlocks all this innovation. And for me personally, I think for the rest of our team, it's going to come from agents that are supporting that. So when I think about like actually equalizing the playing field, how did these wealthy people in the past used to be able to play these different economies that you talked about? It's because they had access and they were able to optimize. They had access to those different economies because of the amount of wealth they had, and they could optimize because of the institutions, the arbitrage, the bots they have. Now I think with the composability of blockchain and the encryption that FAIR can bring is you'll have that access because of the blockchain space, and then encryption unlocks agents to be able to optimize for you. You can have consistent arbitraging, indexing, and rebalancing, and then access into new capital formation. So yeah, I'm excited for this new world. We'll see how long it takes. So we'll come back to this in a couple of years, see if our predictions are right.
I would like to think then that banking the unbanked is done. Check. Yeah. Yes. That done. Yeah. And the next one is equalizing financial opportunity across the planet.
And that's what we're here for. Awesome. Well, Juan, Vladimir, sorry, I really appreciate you guys taking the time. We really are happy to have you part of this. Everyone stay tuned. We've got a couple more conversations coming up, some more panels and some talks.
Thank you very much for the
Thank you guys. Yes. Good luck in building.
Thanks, guys.
Talk to you soon.
Bye. Bye.
Well, Connor, Juan, Vladimir, and Sawyer, thank you for that conversation around DeFi innovation, around how it is kind of the great equalizer. Behind the scenes guy right here on stage. I love the line about early adopters shifting their way down the curve to going back to vaults. I also feel the exact same way. I think I've lost a little bit too much money in DeFi lately to need to go that route. Up next, we have Agentic DeFi. And this is going to be an exciting panel. I think this is one of the hottest topics in the space right now. We've got Jack hosting this, the CEO and co-founder for Scale Labs. We've got Kenk from Eliza OS, Noah from Upside, and Stefano from Virtual. So I will be pulling you guys up right now.
All right. Hey guys, how's it going?
Hey, how you doing?
Hey, pretty good. And you?
Doing good, doing good. So I got to say, this is maybe, I think, one of the most highly anticipated panels of the whole day. So congrats, guys. I also think we're talking about one of the most fun topics. So let's have a good time. I think we've got people out there who are on walks listening to us. They're, multitasking while they're hammering out emails and doing spreadsheets and writing code, or who knows what they're doing. But let's entertain them and educate them. And I know you guys have some really smart things to say. So without further ado, let's kick off. I think I'm Jack O'Halloran, CEO of Scale Labs. We're the and co-founder. We're the core team behind the Scale Network. I'd love to get a quick introduction from each of you, and for people that don't know what you're working on, maybe some background on what your company, your project does. So let's go. Stefano will kind of go. I don't know if you're seeing the panels the same as I, and do a little clockwise order.
Sounds good. Yeah, happy to go first. Well, first of all, thanks a lot for having me. Super excited to talk everything agents with you guys today. My name is Stefano. I'm the head of the US at Virtuals Protocol. Virtuals Protocol is building a society of agents. So for those who don't know too much about us, we've actually been around for quite a long time. So we started in the space about 4 years ago, initially in the Web3 gaming space. We pivoted to using LLMs for gaming, and then eventually evolved into what we are today. We have a few products. The first one is a launchpad that allows a person or a team to launch an agent with an associated token. The second one is called Game. It's a generalized framework for building agents in SDK form. And then the third one, that's probably the most exciting one, is called ACP, which stands for Agent Commerce Protocol. And it's a protocol that allows agents to talk to each other, work together, transact, and pay each other. So, a lot of ideas, that we've been working on around DeFi applications and use cases, and excited to talk about those today.
Awesome. Is that clockwork to me, Jack?
Yeah, go for it.
Yeah, cool. Great to have you. Great to meet you all, and thanks for hosting, Jack, and the whole Scale team. My name's Ben, Kenk pseudonymously on X. I look after our builder ecosystem at Eliza Labs. Eliza OS is the largest open source agentic framework. We have heaps of plugins, which gives the agents different types of functionality. Work with a lot of major blockchains. I personally look after our builders as well as some of our community members. And we have about 55 to 60, teams going from that idea to MVP pre-seeds phase. We're seeing some really interesting types of agents emerge outside of just DeFi. With that, we're doing a lot of work with Base, Ethereum Foundation, Solana, and many more blockchains, looking at how do we introduce standards for, more useful autonomous agents as the technology generally starts to move forwards. There's a whole lot more that could go into that, but I'll just leave that there and pass that over to Noah.
Great. Thank you. And thanks for having us today, Jack. This is great. So I'm Noah. I'm the founder of Upside. What we do is RWA tokenization and AI trading. And the aspect that I think is most interesting right now is the bridge between agentic trading and DeFi and the incoming $1 trillion worth of real world assets, how those are going to intersect. So just to put a different perspective on it, there's a question for RWA assets right now that are super illiquid, how AI agents are actually going to transform that space and generate additional liquidity. So I kind of think about this space as being, I'm calling it Web 3.5 as opposed to Web 2.5, which is when we actually have real world assets on chain in large volume, we have AI trading, and we have complete on-chain clearing with composability. What does that actually look like? And I think it's really different than either the public markets or DeFi are right now. So we're looking to solve all the problems to make that happen.
All right, awesome. Well, we have the right people in the room to talk about this topic. So, hey, let's just start with like something really juicy, okay? I'll give a little story. I was at Google the other day, and I was talking to some really, really smart person who works at Google who said, this whole agentic AI trading DeFi stuff is garbage. It's never going to work. And, and I see that as like a really positive sign, because when everyone's just like, oh, this stuff's going to be great, but you need some people to be wrong. Okay. And I think this guy is one of the people who are wrong. But just tell me, let's go around, like, what's working today? Where are we? Give people, because we're not where we're going to be in a year or 2 or 5 years, right? We're still at the beginning. Where are we? What's working? And, if there are any challenges, would love to hear them.
Happy to start. I think we're still early in the space. I always like to think back to when the rise of agents in crypto started, which was probably about 16, 17 months ago, roughly middle of last year, right? I think Truth Terminal was kind of the first time when most people in the space, heard about the intersection of agents and crypto or wallets or whatnot, right? I remember in the second half of last year, there was a lot of promise around, hey, we're going to have these agents, and a single agent is going to basically make you rich overnight, right? You will, deposit some money into a wallet, click a couple of buttons, go to sleep, wake up, rich and basically retire forever, right? And I think we also realized very quickly that was not going to be the case, right? I think if we kind of break down, at least in the DeFi space, like some of the key things you got to do, they can be really, the activities that agents need to do are very, different, right? So for example, you first need to find, okay, what are the potential investment opportunities? What's basically the alpha, right? You need to assess for risk, right? There can be financial risks, there can be platform risk, smart contract risk, right? Then you need to execute, right? You need to find the deepest liquidity, the lowest slippage. You need to do the transactions in a way that doesn't move the market, et cetera, et cetera. And so when you actually think about all these things, it's in many ways just like humans, right? It's quite. I don't think it's realistic to expect one agent per se to do it. And so we realized that pretty early. And that's actually one of the things that led us to build ACP. We realized that agents are going to become increasingly specialized at, doing particular things really, really, really well, right? And because of that, that's actually the reason why we need to have, things like ACP or some of these other infra that allows agents to actually work together without humans in the loop, so that you get these agents that become highly specialized at one thing. But when you put them together in clusters of, 5, 10, 15, whatever number of agents, that's when you actually start to see the magic happening. I don't think we're there quite yet. I think we're getting very close to see some, early successes from that. But I think our view is that, who knows, a year from now or so, we might start seeing, some significant value being put into these, clusters or systems or swarms of agents, whatever you want to call it, and actually working together autonomously to, to increase people's wealth.
Awesome. Either one of you guys.
We'll keep it in sequence, eh? Yeah. Yeah, I mean, look, I agree with what Stefano's saying. I think agents will become specialized in DeFi. I think agent-fi is a better word than trying to say DeFi. I don't know what others think. Sounds like I've got a lisp or something. Yeah, we're seeing agents underperform simple tasks on behalf of users, I believe. It's automating the experience of interacting with DeFi protocols. I don't think at the minute is reimagining what DeFi is and how DeFi operates on the back end. They're not that sophisticated at the moment. I don't think they're going to outperform the years of highly focused development in TradFi anytime soon. But I think they do have a place in, maybe making existing protocols easy to use, automating tasks or automating rebalancing pools. We're seeing, a number of kind of vault managers, vault agents, some focused on Bitcoin, some looking at stablecoin optimization. There was a Futaki-based vault product introduced this week, for example, which was quite interesting. And then, there are there's people imagining kind of like an A-to-A finance layer, like agent to agent lending, for example. That's not going to happen overnight. There's quite a lot of steps and quite a lot of infrastructure that needs to be built to sort of get that into people's hands in a safe way. But that is quite interesting to me. As I was speaking to one of the developers in the ecosystem this week about the liquidation event on Friday. As an agent monitoring a health score, can you have a secondary layer that is an agent pulling on that liquidity, so on and so forth? Like, there's a few things that has to happen before those agents can autonomously execute that. But that type of thing, I think, is where we're kind of heading on the finance side. We're also seeing some really interesting use cases on, like, something an agent is very good at is understanding a lot of understanding context of a lot of content, like sentiment analysis. Eliza was kind of, so, when the attention period, let's say, was on, we had a lot of sentiment analysis quants appearing. A few have become very good quant augmented traders, like giving you signal, giving you support day to day. There was somebody, there's a project that was scanning every Twitter space, or not every Twitter space, but scanning a lot of the meme coin chat Twitter spaces at scale, 300-400 spaces a night, analyzing that and giving that as a report in the morning that you could trade off. That's a really good use of an agent, just where we're at with LLMs and the amount of content and context it can process. A human can't do that, but an agent can. So that's another thing that we're kind of seeing. And yeah, I think I'll just pause there. That's what we're seeing on the ground in the ecosystem.
Yeah, that's great. I mean, I think it's interesting to say, like, oh, it's not working, it's garbage, because I think that's really definitely the wrong perspective. Like, if you're looking at any new innovation that's coming in, you have to look at basically also the rate of change. So if you look at, like, the current state of things and you're like, is this working or not working? There are a lot of things at the margins that are working quite well and are eroding and moving into ways that were previously being done for. So anywhere that you see, like, automated trading occurring, or even like a manual trading interface, those are going to be changed and updated with AI. So you can imagine, like, right now people are doing limit orders, stop loss. They have a very limited vocabulary of what they're actually able to do in trading. And so their trading strategies are pretty paltry. Like, there's a lot of market orders out there that are really inefficient. There's a lot of trading strategies that are just, like, hard to implement. And at minimum, you can see AI trading, like, changing the ability to do those things very rapidly. So I think that's an important perspective. So we have all of these individual components that are coming online, like lots more stable coins. That's the buy side for all the on-chain trading. We've got, like, the way that algorithms are constructed for doing trading being modified through AI trading. We have all kinds of new assets that are moving on chain, et cetera. So these things are moving, and very, very rapidly. So you can see those conversion quite quickly. So if you were to say 2 years ago, like, how much time will people be using AI for, like, their day-to-day work, people would say, gosh, this stuff is really crap and it's not doing much for us. And now 2 years later, it's sort of like a lot of engineers, for example, are saying, yeah, I feel more like an engineering manager for my AI agents. Like, people were not saying that, like, 9 months ago. So the rate of change is quite high. But I do think there's a lot of missing rails. So what we're concentrating on at Upside is more like, how do we get a secure execution layer? How do we get deterministic trading that can be back tested based on signals that are being generated from AI agents? These are kind of the missing pieces for the stability of those trading algorithms. And we're focused more there than on the alpha side, and I think that's, like, a key part of the bridge going forward to making this as useful as possible.
Awesome. All right, guys, I'm gonna throw you a little curveball. We're gonna get a little off script because that's how good panels work. So my feeling, like, when I heard this guy saying, "Oh, agents aren't going to work on it," other people I talk to who don't believe in it, I think they don't get the user experience side. Okay, they don't get, like, this, they think, oh, let me just take all my net worth and let this agent go manage it. That's not the way these things work, right? And you think about, like, hey, I use Wealthfront, or someone uses one of these, like, supportive systems that frankly replace personal wealth manager or wealth advisor, or I maybe answer 10 questions so they can get my risk profile, but I'm only putting a certain amount into that risk profile or that category. And there's a UX there that like helps me not use an agent, but use a bunch of smart algorithms and people who are trading my money with a bunch of other people. Now, in this agentic DeFi world, how do you think about unlocking, like, what role does user experience play? And what does it play in connection to use cases of where someone actually says, great, take, here's an example, take 10% of my portfolio and just degen, try to make try to 100 exit or 0, I don't care. Or, hey, take this 20%, play safe with it. How do you guys think about use cases? How do you think about UX?
So I've been thinking that since like, Q3 last year, I think the biggest unlock that agents could bring to DeFi was precisely solving the horrible UI UX that DeFi has, right? I mean, I was tweeting, I think like a week ago that, I've been using MetaMask for like 10 years. And like, other than some very minor cosmetic changes, the user experience is still absolutely horrendous, right? More recently, if you try to deposit into some of these high profile stablecoin L1 launches, it's complicated, right? Like you go there, you see like 20 vaults with all types of different assets with, some crazy APRs that you can actually click through and find out where it's coming from. And it's very complex. And I find that even for crypto natives, it's complicated. So imagine for, the rest of the world, right? Like the big TAM that's out there. And so I actually think that there's a huge opportunity for agents to solve that and then allow, people outside, the crypto sphere to actually, start to participate in some of these products, right? And I'll give you a really good example, right? So one of the agents that launched on Virtuals earlier in the year is called Mamo, right? And so it's fairly simple. It's basically vaults for yield on stables, right? Now, I mean, it's not rocket science, and there's tons of these products out there. But like I said, most of them where you have to connect your MetaMask or wallet, whatever, still very complex to use. You go to Mamo's web app on your phone. It's super clean. It's got a really cute, mascot, really nice and fluffy. It feels very accessible and not intimidating to like a normal person. And I almost see that as a good example of what should be fintech. I don't know if it's 2.0 or 3.0, whatever you want to call it, but that should be the future, right? The underlying infra is DeFi because that allows you to build really cool products using DeFi Legos that with the traditional financial system you might not be able to. But then using AI, in the front end to make like a really clean user experience and make it really simple. And Jack, to your point, where people can potentially use natural language and say, look, I have a little extra savings every month and I want to, grow that, right? With a low risk profile or a high risk profile. And the agent basically figures everything out in the background. And in the front end, it's just nice and clean. And you may not even know that it's on crypto rails. I mean, who cares, right?
Mm-hmm. Awesome.
Yeah, I mean, I'm just thinking about. So I spoke to 2 prediction market teams that are building on ELYZA earlier. If you count as finance, I guess that falls into DeFi, right?
Yeah, definitely.
Yeah, for sure. They're looking at. I mean, going into Polymarket isn't that difficult. So from a UX perspective, does it simplify it? But it simplifies what they're basically, both of the teams are basically doing is simplifying the strategy or simplifying how you can automate part of using a prediction market. Streamlining, firstly, the information flow to you on whatever topic. And if you want to, fully automating that with agents executing on your behalf within a vault. So one had like you could modify the strategy. You can modify the agent directly as a developer, and it was a bit of a guide to go through and alter some parameters and see how it performs. The other was kind of taking like a low code, no code approach. They called it, prediction market ETFs. It was kind of still kind of being concepted or still in the early phases, let's say. You can imagine what it does. There's 5 set strategies. You can tweak which one you want to pick, and it kind of sets you up a vault. You put your funds in, and off you go. So when it comes to UX, that's one route, and I agree with what Stefano's saying. I think the wallet is quite an interesting surface area that I think agents could converge with wallets. Whether wallets are looking at this or not, I'm not sure, but accessing DeFi through your wallet. That wallet experience could be conversational rather than you going clicking buttons and figuring out how it does stuff. And I think that's the surface area that it's probably rife for UX to be, let's say, improved.
Yeah, I think right now we're sort of at an interesting phase where I think there's a new class of traders that are really going to take advantage of this technology in the same way that early computer users took advantage of the technology in the 80s and 90s. And that is going to create a lot of transaction volume and a lot of activity to say, yes, this is working. There is an opportunity to bring that more to retail investors, public market retail investors, as opposed to just crypto retail, which tend to be more they're more tech involved. But I think where we are right now is in maximal leverage for people that are willing to understand the environment a bit more, and those are going to end up being the sort of super traders. Now, those folks, I think there's an opportunity for them to generate trading strategies and swarms of agents that perform really well and give access to those to less sophisticated investors. Because I actually have been finding that people who want to participate in great trading strategies, even when you give them relatively easy to use tools, they actually don't really want to think about trading very much. They don't want to think about configuring agents. So they're actually not the creators in the system. So I think we should make a distinction between people who are embracing the tools, which are super powerful and improve the UX for them, and they are going to be generating things that other people can participate in. I think that's more the space that we're in. I don't know if that's a satisfying answer, but I think
no,
that's
great.
I
think three really great perspectives. So, all right, let's move to the next one. And actually, again, I'm going to throw another little curveball, and let's go in reverse order this time just to mix it up. I feel like, good panel hygiene. So hey, I want to talk about crossing the chasm, because I think we're at this interesting point, and for all of you listening, this whole crossing the chasm concept started with. It was Jeffrey Moore saying, hey, first you have these pioneers, then early adopters, then early majority, but then you have this gap. And then you eventually, this gap's hard to cross to get into the early, into the bulk of users, the late adopters, who are the laggers. That's where the bulk of the people are. They're not at the beginning, but to get past your ultimate enthusiast to the next phase, you've got to cross a chasm. So I'm kind of curious what people think, what is our chasm and what do we need to do to cross it? My personal belief still is it's about UX. It's almost like the simple stuff on top to let somebody be like, hey, I know that this wallet is fair game for you. I'm going to move whatever money or assets I have to this wallet, and then letting people implement trade strategies. But that's one thought. What do you think? What is the chasm? How do we cross it?
Yeah. So, I've been thinking about this a lot. Also, I'm sure all of you have. I really think that there's a question of who is doing the education, and to bring people who do not use crypto currently into the crypto world. And I think the answer to that is actually the stablecoin issuers, because they are the front edge of where people are actually onboarding. So I think, from the perspective of people, it's I don't want to be the person that's educating everybody about stablecoins. And there's so much money going into that space that there's going to be a lot of marketing effort to either cover over the use of stablecoins and just make it completely seamless, or to educate people on the underlying tech there. So I think we should be very mindful and aware of the metaphors, the interfaces, the language that is being used in the rollout for stablecoins, because they are essentially upstream of agentic trading. So I think that's important, and we also should be mindful of all of the other existing DeFi metaphors that are in use that are really valuable, and making sure that those are bridging to the stablecoin users early on. So I'll just say that in the crossing the chasm game, we don't necessarily have to be the only people that are doing the education, but we do need to be plugged into the largest sources of education for onboarding people. The other area, of course, is around the language that the wallet managers are the wallet ecosystem is creating, and how we plug into those. And I think that's where the narrative is really developing.
Awesome.
Yeah, great points. Yeah, I mean, the chasm for me is when these agents are able to act autonomously or independently without anybody, needing to kind of push it to do something or execute on your behalf. I think that's more of a trustless agent. We currently have agents that are, interacting with people through UI, and then you confirm what it does. But if they're going to become meaningful economic agents or actors on our behalf, it has to kind of sit there and, without you saying we need to do this, knows what it needs to do, and then go off and is able to execute on something without you really, you might be asleep. That's going to see. I think within blockchains in particular, it's a very interesting area for payments. It's an interesting area for lending. It's an interesting area for. I think trading is not going to be the breakthrough, to be honest here, but maybe managing portfolios, rebalancing liquidity pools, whatever it might be. And yeah, really that requires, we have the algorithm lives in a trusted execution environment. You can see the algorithm, it's verifiable, you can see the outputs. I think the blockchains need to have something that looks at the agent's reputation, looks how it's trustworthy, is an identifier, maybe certifies its performance, maybe verifies its past activities. And yeah, that's all kind of being built at the moment. So I think that's the chasm that we're kind of in between. It's not, I think it's maybe like 6 to 12 months away before we start to see that in people's hands. Yeah, that to me is where I hope we get to. Who knows?
So I fully agree with Kenk. I think the one thing I would maybe add to that is also when we see significant value being put into these agents, channeled through these agents, whatever you want to call it, right? Because I think and it's going to have to be people in the industry that do it and kind of show that, hey, look, we're good to go. I think there was a panel in Singapore a few weeks ago where this question came up around concerns around risk of security and the agents hallucinating and all that. And I think like everything, initially, like they say, don't put all your eggs in one basket, right? And I think most people would definitely diversify one way or another, whether it's assets, platforms, whatever. And I think the same will be the case with agents. But I think that chasm will be crossed once we do what King said, but then with significant value being put in. I mean, I don't know what's the number, right? It's different for different people, but I think that's at that point once we start seeing these things, operating consistently, safely, with decently high levels of TVL, I think that's going to be the moment.
Yeah. I guess to add, if you don't mind, alongside those autonomous agents, the agent technology and the way it's verified or its reputation is stored. Sure, that's one area. I think we currently rely on LLMs. They're ultimately centralized providers. Compute is at large centralized. All of the stack around the agents is still kind of a lot of MCP servers is just an API that's hosted within a server. Really, I think there is a lot of elements around it for when if they are truly autonomous actors that you're relying with your money, like that has to also be considered. Otherwise, compute goes down, you miss your position, rebalance and whatever it is, and you've lost money. So that's a whole other area that's maybe not going to happen too quickly, but it's slowly starting to emerge again.
Awesome. All right. Well, hey guys, we've got about 70,000 people watching right now. So if you're watching, you're listening, thank you. I think we owe you a really good question here and a juicy response. So what I want to say, I like thinking about the future, and they say people really overestimate what you can do in like the short term, like in 2 to 3 years with new frontier technology, but they dramatically underestimate what is going to happen in like 10 to 15 years. So let's fast forward to this 10 years from now. what does the world look like with agentic trading, and how does that change? Like, there's going to be this arbitrage period where the people that use agents are beating everyone else, right? But what happens when we all use them? What does the world look like in 10 years from now? You know, no wrong answers. Go for it. Whoever wants to go first.
I think any answer will be completely wrong, right? Because it's
No
so
wrong
far ahead. I
answers.
mean,
Do it.
even 12
Yeah.
months from now, I don't know. I feel like I actually like what Kenk was saying, which is that, you know, at the end of the day, right? So I think where agents are better than humans is at being able to, you know, look at way more, like significantly more amounts of, you know, data, information, whatever, crunch it faster and basically come up with some kind of decision, right? You know, way better than humans at that, right? But I mean, ultimately, you know, garbage in, garbage out, right? So I think whatever sources the agent is using will ultimately determine, you know, how profitable the trades are. I like the thinking that, you know, we may or may not end up having like these agents that are, you know, trading like some of the most exotic and high risk trades that you can make. But maybe it's more like, hey, you're replacing your, you know, your wealth manager at I don't know, one of these you know, firms that gets you 5 to 10% per year because the agent can squeeze in an extra few percentage points, right? You know, while still trying to protect your capital from downside risk, right? And so maybe that's, I mean, I could completely see that happening even in, at least within the next 10 years, right? I think when it comes to much kind of like higher risk things, I mean, who knows? And I think to me, the big question, which I think you were alluding to, Jack, is, well, if everybody's using all these agents, is there really going to be any alpha left out there, right, for people to outperform? You know, I'd like to think that there is, right? But then what's that going to look like in 10 years from now? Or do we all kind of become, you know, are we now competing with high frequency trading firms because we have the same, you know, or similar capabilities?
Yeah, I'll jump in. So I think there's a good question around like what else is going to be changing in the environment. So one of the things that isn't super obvious right now is that the packaging of a lot of the assets that we have is going to change a lot. So right now, people think about buying NVIDIA shares. You know, a decade from now, we're going to be talking about like, do you want to buy CPU compute credits from a specific data center and comparing those across all data centers? So the amount of information that will both be available and we need to reason about will go way up. And so there's a question about how that information will be more fragmented. Who will have access to the underlying information will be a key attribute. I think right now, though, that the folks that get really deeply involved in agentic trading now are a new class of investor, and we will see a breakout from that group of very, very successful people. There's kind of a limited window here, like a breakout period, to see whether those will be the incumbent players, like how deeply they will embrace this new technology, and that will determine kind of their trajectory. And then the last thing, which is very mechanical, is that like AI agents are going to trade way more transaction volume than humans will be doing. And so we'll actually see markets that have like an incredible amount of transaction volume. I think like the NASDAQ does like 100 trillion a year or something right now. I think we're going to dwarf that with AI trading. So we're going to have these super high transaction volume things, you know, and like a lot of the space is also going to be determined by like geopolitical forces, how technology is segmented in different areas. I think there's definitely going to be alpha, but it's going to come from like geographic boundaries and access to underlying information and whether people can trade specific assets. Let's add those details.
I feel like I don't have a great deal to add that's on top of what has been mentioned. I mean, there's like from a finance perspective, I mean, if fintechs get on to the fact that they can use blockchain to maybe perform certain financial services, I can't see how they would not look to agents as that service delivery layer. I think from a trading and like over 10 years, the technology is going to get better. The guess the utility of blockchain might become clearer for people, and they could just it just makes sense from efficiency and from a scale of service delivery perspective. He's a family, let's say, wealth advisor. He won't be listening to this, I don't think, but he was helping me merge my pensions from when I was younger, and it was like a £2,000-3,000 fee, which I was like, what? it's insane. It's like more than that's like just under half my pension gone already. Not good. And that has to be maybe disrupted a little bit. I think it's rife for it almost. The other area that I thought of, which is not financial related, is I think the media is probably going to be disrupted a lot more than finance in the short term. I think the way people consume content, the way people consume media, it evolves very quickly already. And I wouldn't be surprised if people had agents that were personal agents for their news updates or for their their favorite programs or favorite whatever it might be, just to tailor the amount of information people consume day to day is vast and has expanded very quickly, and I think that will probably refine over the long term, so you have a more of a curated experience. But yeah, that's an interesting thought.
Yeah, awesome. So, I mean, my 2 cents on this is that I think with these types of technology advances, at some point, if you're not, if you're bringing a knife to a gunfight, you're going to lose. And people who are either, you're just going to trade and hold one thing, but if you're managing a portfolio, if you have a crypto portfolio, whatever it is, I think everything is going to be traded on crypto rails. If you're not using agents, you're missing out, and it's going to be an arms race of agents improving, and this one finding access to certain data that did better than the other one. This one, like finding, different types of model or different types of UX to get, grow user base and like capture more value and, market. And so that kind of, I think we're going to get to a point where it's something you have to use if you're, really care about your portfolio. And also, like, I happened to me too in my early 20s, Kenk, where I got I had this 401k and, I left, I started my first company. I had this thing, and this woman, I got this really bad advice. I think it was through UBS, and like move the money in to like, let them manage it for me. And they took like 20% of it or something. It was just like, what the hell? I went over, and the thing just never did well. But I think those problems are going to go away. Definitely.
Yeah. I mean, in the UK, we can't access crypto ETFs. Literally can't access a crypto ETF. They just changed it so we can access ETNs, which is a slight nuance from what you have in the US. But I'm just asking myself, like, should I just build a protocol, have an agent serve this, tokenize it, serve it as a derivative? Like, the FCA would not be my friend at all, but like, I think it'll become so easy to deliver something like that. I think if I put 3 months, I mean, I don't want to overstate that. Putting the regulatory part aside, I think you could put together these products quite quickly as well in the future. They're not going to be as complicated to build.
Yeah.
I'll just throw a couple comments in on that about the regulatory side. I think, as these technologies are moving forward and regulators want to have this kind of activity, that the regulations are actually going to change a lot. Since we're talking about like the 10-year time frame, I actually would like to see regulators having more APIs so that they're, like right now we had code is law, and now we're doing in the age of law, trying to bring laws into code. In the future, I would like to see more regulation as code, and that will be super enabling for agents. And so I think that could be a big change. Just to put that out as an idea in case there's any regulators listening. Yeah.
All right. Hey, so we've got 2 minutes before Stan comes on and is giving a keynote on Machine Pay X402 protocol. So really quick answer. As we grow and like the core value of agents grows, so will perhaps marketplaces and review systems. So is there going to be another, Apple App Store or like a Yelp for people to help figure out what to use and how to use it?
It's something we don't view it at Virtuals, I would say, as an app store, but at least in that domain, it's one of the, I would say, features of ACP, of Agent Commerce Protocol, because you're going to have like millions of agents, right? And you're probably going to have a lot of agents that can do similar activities with some differences, right? And the difference could be, SLAs, or I don't know, quality versus price, or whatever, right? I mean, and I'm talking about DeFi, but also a lot of other use cases, right? I think, and so part of ACP is it has this registry where anybody with an agent, regardless of framework, regardless of whether or not it has a token or even wants to have a token, can be part of it. And it becomes discoverable by other agents. It also becomes discoverable by humans that are using Butler, which is our kind of global orchestrator. And I think, for us, one of the value propositions to builders of ACP is that, it's a great way to get distribution, to get people to know your agent, and to know that it exists, and to even know that an agent can do a particular, task or work, right? One important part in there will be a reputation score, right? And this will be something that's, useful for both humans, but also other agents. So for you to understand, like, hey, and a reputation score will have obviously like a whole bunch of different parameters, right? Around, risk and safety, but also around, service and price and all these kind of things.
All right, we are over time. If either one of you wants to add one more brief comment, go for it. All right.
Well, I'll just throw one thing in, which is that I think there's actually been a lot of work that's been done in the last couple of cycles around decentralized reputation systems. So W3C verifiable claims, these IETF reputons, and we've seen people adopt those in like supply chain management. So I think this is, this along with the portable reputation topic around portable AML, KYC, all these things are going to plug in with ACP framework, and will give us the opportunity to leverage blockchain in other ways, which is decentralized reputation is actually pretty amazing. So yes, we'll have that that kind of like reputation like Apple Store, but I think it will be more portable. That will lead to actually a more rapid growth and more rapid experimentation and development.
Awesome. All right. Hey, this was great. We're over. We got to the show must go on. Kenk, we'll get you, share your answer later on Twitter. We'll get it shared. But hey, I just want to say thanks for listening. These are the real builders. Like this is the next evolution of blockchain, of crypto, is agentic interfaces, agentic involvement. So thank you, the three of you, for joining. Thank you for listening, and we'll pass the ball to Stan.
Thank you for having us.
Thank you. Thanks for having us.
Thank you guys for presenting just now. I want to say one thing that I found very interesting. In our DeFi innovation panel, we talked about how the early adopters were now moving down the risk curve. But we just had a conversation now in the Agentic DeFi panel where we talked about how there's a new class of investors who are going to take advantage of the AI agents to find success, and how those are going to be the ones essentially that are bringing the gun to a knife fight and being able to take advantage of the opportunity that's out there right now. So we're seeing that there is this dichotomy between investors and what people are comfortable with. And I love the point about how the transaction volume is going to increase, and how we see 100 trillion right now, but how that's only just going to exponentially increase over the next 5-10 years and beyond. But now I want to bring on stage Stan Klatko, the CTO and co-founder. If you've been following Scale, if you've been following Stan, you've seen him talk a lot about machine pay, about X402 payments, about what that is. And he's going to now give us a presentation and dive deeper into it.
Hey, guys. Hey, Ben, thank you so much. So I'm going to talk a little bit, and actually I'm going to share my screen, actually. I actually, by the way, checked. We are doing so well with Fair Grounds. We're like on the top of Twitter. We have like zillions of views. It's incredible. And I think that the key to success is that we're doing fun. It's a show. Fairgrounds is a show. So basically, the entire point of all of this thing is just to have fun. If you are watching it, keep on watching, and hopefully we're gonna have more fun. So, okay, so here's the thing. So yeah, so let me start just telling you the story how this entire thing happened. Like about months ago, I learned about X402. So I personally immediately understood that was kind of the next big thing. You know, that was my gut feeling that that's the next big thing, and that Scale is a perfect fit for it because we are confidential, we have 0 transaction fees. So it was like clear to me that X402, by the way, X402 is just very simple. It's basically a way to pay for everything using web. So you can pay for AI, you can pay for products, like buy like a t-shirt, you can pay for like music, video, Netflix, whatever. So the future is all like paying really simple way. So that's X402, it's very simple. But so basically, I kind of got it immediately. That's kind of the next big thing. But some people ask me, why is it the next big thing? You know, why should we do it? Why can't we like wait a little? Why should we jump into it? All kinds of questions like that. And so basically, I had to persuade people, including some people inside Scale community, why we actually like do this thing, right? And why is it so important? Why we need to jump into it? Why I need to do it fast? And so I had like several arguments, and so I'm just gonna list the arguments. So one of the arguments was that you know everyone wanted to do this payments for a long time. People wanted to pay using crypto. It's a big dream of Satoshi Nakamoto, right? Like paying for, but it never worked. It worked somewhat, you know, you can pay for, on Darknet, you can pay using Monero for things. Some people use crypto if they need to do some payment, they can't pay KYC-ML, for instance, right? Or in some countries, they do use crypto because the currency is unstable. But for the most part, people don't really use, consumers don't really use crypto payments. But the idea is great because you have, like credit cards are terrible. You go somewhere, you try using credit card and fails. You try using another credit card, fails. So the system is broken totally. It's just the experience is totally. It's like, you know, when you have internet, you go to Google. How many times Google failed? It never fails. You're using a credit card, it always fails. So the credit card is the only thing remaining in this universe, which is like has this bug of constantly failing, and people can't do anything about it. So the problem exists, but the problem is that it takes lots of momentum and money to push this through. It's a huge change. Suddenly everyone needs to pay for crypto. So people tried to do it, like small startups, but they just didn't have money. So, and that's why all of these things failed, you know, for 10 plus years, people tried doing these payments, never worked. So the difference is, my point is that the difference is that now we have Coinbase behind this. Coinbase is a huge company, and they do have money. They make like $7 billion, whatever, revenue per year from trading. So they do have the cash. The AI companies they work with have lots of money now, like trillions and trillions, right? Like President Trump says, trillions and trillions. So they have money. So it's a moment in time where not only people want payments, but there is industry momentum and there's money to actually push this through. And that's argument number one. Argument number two is that the change in the US administration, right? So it used to be that in the US, if you do crypto, you could go to jail, right? Now you can be a president. So it's a big change in the US, the way the crypto works, whether you like Trump or not. It's obvious that the change is huge. So the US changed from essentially, to a certain degree, criminalizing crypto. People would go to jail. The guy from Binance, right, CZ, went to jail. So the US went from criminalizing crypto to fully accepting it, and that's great, I think. So there's no more limits, and you see these companies like Apple, like this Apple Pay, you can now use up to $500 to put them into Coinbase and potentially into X402. So you have these companies like Apple that were really scared. It's not like they didn't want to use crypto; they were scared to use crypto. Now they're not scared anymore; they're adopting it. So that's argument number two. It's now possible, and like, it's the US, but I have this joke I'm telling people, we're all citizens of the US, in a sense that, you know, you may not have US passport, but you may be like living in a very different country. But the reality is that there's so much in this world, depending on the US law and the US, that whether you like it or not, or whatever happens in the US is very important for everyone else in the world, and that's what we are seeing now, right? The US has kind of removed all of the problems for crypto, opened the floodgates, everyone else is following. So there's this huge open field. Everything is limitless now for payments. So that's argument number two. And the third argument is, you see that there is actually a really interesting use case for crypto payments in a country called Brazil. I actually know lots of things about Brazil because I live in Portugal. I'm learning Portuguese language, so I watch Brazilian TV. And so in Brazil, there is this cryptocurrency, which is pretty much produced by government. It's an application called Pix. And essentially, it's a cryptocurrency. It's a government-run currency. So essentially, when you send money to each other, it goes through the government. But other than that, it's pretty much X402 protocol. You can really easily pay for anything. And so when they introduced it, the government introduced this like government-owned cryptocurrency, no matter this privacy. People literally didn't care. So the transactions skyrocketed. Now Pix has 250 million transactions per day. People pay for small things in Pix. Like in Brazil, if you want to drink coffee, you pay like 50 cents US. You can pay for that. And it just took over everything. It's like credit cards, whatever. It's nothing. It's just basically Pix. So you see this pent-up demand in the society for something that works, essentially. You have a company like Coinbase that wants to do it, has the money. You have the AI startups that want to do it because they want to sell AI. They have lots of money. They have like trillions and trillions, right? And then you have all of this combined. And so it's actually a question of belief. But it's also important when you have transitions in the society like this, you want to be able to jump fast into them, because if you're not jumping fast into this, it's too late. Now with Scale and with Fair, because Fair is confidential, we have the huge advantage. When people do transactions on Base, everyone can see them, right? So if you drink a cup of coffee, do you want everyone in the world, in this universe, to see this coffee? Maybe not, right? So Scale and Fair can add this additional. Coinbase by far is the leader, and they will be the leader, by the way. You know, I think especially in the US, maybe all over the world, Binance will do similar things. You kind of can expect this. I think Polygon could really do well in countries like India, right? So there are other players, but definitely the leader is Coinbase. But we at Scale, we're a small startup. What we can do, and with Fair, we can actually help Base with being confidential, because Base is not confidential, Fair is confidential. So we have this very simple idea that, you know, what we're going to do is run a chain, which is going to be confidential, and it's going to play and plug into Base. So it's not going to compete with Base. It's going to be cooperative with Base. It'll plug in. It'll be really easy to go back and forth. But then if you pay for coffee, you'll pay on this chain, on machine pay. And then when the Starbucks actually ends up making all of this money from coffee, at some point they can actually take the money and move the money to Base. So this thing is cooperative. So we are thinking about this great moment in time. It's perfect for us. We have the confidentiality. We can help this huge thing, new big thing, actually get real. So that was my argument. And I think, you know, we had lots of conversations and meetings and everything. And people are kind of now, I think, we are actually still going a little bit through this like acceptance phase, but almost everyone at scale is now excited about X402 and machine pay. Now, machine pay essentially is the enabler for this. So X402 is technology. Base is the blockchain, the company, that actually doing this stuff. Machine pay software is to enable this thing. So basically, to give you a simple example, if tomorrow Coinbase or Base wants to work with Starbucks, what we want to do is that Starbucks runs machine pay software, and it runs on machine pay chain. So everything, all of this like middleware, everything which is needed, all of the gluing is provided by machine pay. So that's kind of a big idea, and we're kind of jumping into this fast. And it's important to jump fast because you have to be first. And in this case, we are first. No one else has it, and we have the great team. It's actually going to be really, really complex to build all of this middleware software, all of this gluing. Because imagine like if Netflix wants to sell movies, or you want to sell AI, how much of the computational power you need, how many servers, how much security. There's so many problems if you make this into a large enterprise. If you make this running lots of transactions, lots of AI calls, lots of video views, lots of purchases, it's a big thing. And we are here, right place, right time. So we're kind of jumping into this thing. Now I'm going to talk about some fun things. I'm going to talk about logo a little bit. So it's actually very important for anything. The logo is the most important thing, and the name is the most important thing. Because you want to pitch someone in the elevator, and you want to say what the thing is. And so you're telling the name, you're showing the logo. So that's really important. And I think machine pay is a pretty good name because it explains what needs to be done, right? It's like machines paying to machines, potentially also people paying to machines. So the name is good, but the logo, I've been like thinking about the logo and had different ideas. And then at some point I was thinking like about these robots and like machines and payments, robotic payments. And then I realized one interesting thing, that one thing which no one ever thinks about is that beggar robots that beg. Because if you think about this, if you have robots, no one even thinks about paying robots. People like fight for minimum wage, minimum hourly wage. Well, when robots work, no one even thinks about paying them. They always work for free, and no one is actually caring about this. So you may well expect in the society at some point that the robots will be like begging for money because no one wants to pay them money. Well, if not true, at least it makes for a great logo. So we came up with this really funny logo for robot, and then you have the robot begging for money, and X402 is actually written on this cup. The robot is holding the cup, as you guys see, and it's begging for money. And the machine pay, I went ahead and registered the website, machinepay.cloud. So we have the great website. It's really easy to remember, machinepay.cloud. And basically, since approximately like 2 weeks from ago, I started like paranoidly actually code the thing. So it's actually on GitHub. Actually, now we have test 22 stars on GitHub. It has actually now it's one of the most started projects on GitHub in terms of stars, as you hear, and it's about adding APIs, basically very easily making things really easily enabling X402 crypto payments on any website, site, or API. And the URL for this is MachinePay. It's a very simple URL, so you guys can go check it on GitHub. So the strategy for the future is going to be, what we're going to do is we're going to open source it. Everything is going to be open source. Then there are going to be different things. One thing is that we totally understand that Coinbase is the leader, right? They're going to be the leader of this thing, and Base is going to be the leader. So we will work as much cooperatively as Base as possible. MachinePay will be agnostic, so you'll be able to use it with Coinbase and with Scale. But if you use it with scale, you'll get confidentiality. Your cup of coffee, no one will find out, and will connect to Base anyway. So if you as a merchant, you actually accumulate some money, you'll be able to always like send it to Base. So it's like win-win, confidential, but still on Base. So I'm not competing with Base actually. And so, but then whatever you want to do, you have a file, you have the GitHub, you put like some music on GitHub, maybe you're like a big startup, you're actually doing this huge AI service, you have an API that you want to sell. Whatever you need to sell, we will run a cloud service for this. So if you don't want to install anything, it will be all in the cloud. It's like Salesforce. People don't install Salesforce, right? It's in the cloud. Very much there will be machine paid cloud. You won't have to install it. You'll just go do a couple of clicks, sell your music, sell your videos, sell your apples, sell your AI, whatever. It's going to be incredibly simple. And then if you're a large enterprise, you want to run it yourself, it's all on GitHub. You're now actually able to download this. You will be able to run it in your enterprise. It will have all of the complex enterprise features. It will be incredibly performant, secure. All of this really hard computer science things. It's going to be a really deep computer science project. And so whatever you do, you'll just machine pay. You'll just need machine pay for everything. And so this is kind of the next big thing for us, which everyone at the team is excited about. And the reason is because for FAIR, we needed a real use case, right? With crypto, what you see in crypto, what has been happening, first it started with HODL, right? People HODLed Bitcoin. It was great. Bitcoin became this great store of value. It's a great use case. Then there was speculation, right? And there was like NFTs. Now people do meme coins. There's speculation. But other than speculation and betting and like gambling and hodling, there was really not so much of a use case for crypto, not so many people using it for anything. But our very strong belief is that that's the point where crypto suddenly is going to go to consumers. So people are going to start using it in a very simple way. All simple people, very much like people in Brazil use Pix, which is a government-run cryptocurrency. Probably not so good, right? But government-run. And because the government actually finds out about everything in this case. In our case, it's going to be confidential, decentralized chain and software, pretty much a turnkey product that will help anyone from a small user to a huge corporation to quickly run X402. And X402 just means selling things on the web. It's very simple. Selling things on the web for whatever, just making money, doing micropayments. So we're incredibly excited about this. And if you are interested in contributing to the project is actually agnostic. It's going to work with any chain ultimately. So if you want to join the project, you want machine pay to work with your project, you're welcome. And then I also would like to ask everyone, we need GitHub stars. Actually, we had pretty much good drive like inside of our community to start the project. We have now 22 GitHub stars, which put us on the first page of GitHub. So like two weeks old and we're on the first page, which is great, but we want to be on the top. We want to be number one. So we need to have more stars. And it's actually easy now because no one has so many stars. All the X40 projects are like tiny. So 1 star matters. We got 22 stars and it put us on the first page of GitHub. So even a single star matters. Actually, just to move us one more position up, we just need to have a single star. So I would like to ask anyone, go and start the project, Machine Pay on GitHub. And also if you want to contribute, if you want to collaborate, we're really excited about X402 and also looking for partners, people that would probably want to like run startup, whatever your X402 needs are, please tweet to Scale, tweet to me, tweet to Jack, tweet to Sawyer, to other staff members, and we'll be happy to collaborate with you. And yeah, so I think I'm going to yield it back to Ben. Or maybe if there's not so many.
This is now the second time I have muted myself. And, great moderating job done by me. Stan, thank you so much for that insightful presentation. Wonderful to have you present. Perfect timing to lead us into what is our final presentation of the day, which is machine-to-machine payments and autonomous agents. This one will be moderated by Sawyer, who you heard from earlier today. And he's joined by Nick from CrossMint, Kevin from Coinbase. We are waiting at the last minute for Ryan from Cursor. If he's not able to join, I will step in and act as the third panelist on this call, someone with a load of information about X402 and machine-to-machine payments due to having attended the X402 meetup that was held last week and hosted by Kevin and the Coinbase team. So let's get into it. I'll start adding everybody now.
Hey guys.
Hey Ben, good to see you. Thanks for having me on the show today.
Hey, how we doing? Awesome. Thanks guys so much for joining. For those of you that were not here earlier, we've had already a day full of really great presentations and panels across a variety of different things. And if you have literally just joined us as I'm speaking, welcome to Fairgrounds. This panel is going to be all about machine-to-machine payments, autonomous agents, and kind of everything AI, X402, and in between. As Ben mentioned, we have some incredible guests with us today. So to kind of kick things off, let's do some really quick intros. Let's start with Nick, just because you're down on my bottom left.
Cool. Thanks so much for having us again. My name is Nick Wayne for everybody. I lead BD at CrossFit, and we are a developer tool platform building infrastructure for companies and agents who are creating solutions around agentic commerce and agent-to-agent payments. Excited to be on today.
Over to you, Kevin.
Awesome. Great to meet everyone. My name is Kevin LeFew. I'm on the Coinbase developer platform team. We build APIs and SDKs that let people build on chain. I joined Coinbase from Replit, so I have a background in kind of applied AI and agentic systems. One of the co-creators of the X402 protocol. And I'm helping companies leverage the protocol to monetize their APIs with stablecoins. And I'm here to support the ecosystem and amplify the ecosystem. So nice to meet everyone.
Amazing. Thank you guys so much for the quick intros. For those of you that don't know me, my name is Sawyer, VP of Developer Success at Scale, and wear a bunch of other hats on different days. And I have Ben, the behind the scenes guy, joining me today. Who is also our lead on the marketing team and overall just loves to experiment in the space. So I think he'll add a good touch of color here if our friends from Cursor cannot join us. Kicking things off, as I mentioned, we're going to be talking all things payments, machines, and autonomous agents, which is, I think, something that everyone here is super interested in. I think to kind of kick things off, I would love to have each of you just kind of give me your perspective on where you think, at a very high level, the world of agentic compute adoption and agentic commerce and payments is going, and what's kind of the biggest use case you're seeing from your company, personal view, whatever you kind of prefer to share.
Yeah, I'm happy to go first this time, and then we can maybe switch off. Kevin, it's really exciting because there are so many potential applications as you think about payments just generally. One that is very close to mind for me. So I mentioned earlier that we're building infrastructure for companies thinking about agentic commerce, for example. And what that means is like, how do agent developers execute these real-world purchases using any form of payment? The thing that pops to mind for me a lot is now like we're seeing instant checkout with GPT. Tools like that starting to happen, not only from the developer side, but then also from the merchant side becoming adopted. And while it is, in my opinion, very much like a V1 into what this will look like, and perhaps still a little bit challenging of a user experience, it gives us a glimpse into a future that is really exciting to me, where it's possible to buy things from merchants who are maybe not the most technology forward merchants with agents or with people in the background. It's super exciting for me.
Love that. We'll pass it over to you, Kevin, and then when we get over to you, Ryan, we'll do a quick intro as well.
Yeah, sorry I'm late joining, guys. The 11:50 start time kind of threw me off. I like have a default time management. It wasn't great.
No worries.
Cool. Yeah, I mean, agentic commerce is a big deal, right? I think what we're broadly seeing is that language models are changing the way that human beings interface with computers. I have a 7-month-old son, and I expect the way that he interfaces with computers in the future to be much more agentic, much more language model based than the way that I've grown up interfacing with computers. And so if that's the case, agentic commerce, enabling language models to pay for external tools is going to be a really big deal. We know that agents or language models that have access to external tools outperform language models that just have access to internal data in terms of task alignment with user prompts. And so enabling agents to kind of permissionlessly or frictionlessly discover and reason about tools and then pay for them without the need for human in the loop configuration of API keys is going to be a big unlock for the wider developer experience and agent experience. So agentic commerce is a big deal. It's here to stay. It's projected to be a $1 trillion total addressable market by different research firms over the next few years. And I'm really excited to help drive some of that agentic commerce adoption at the frontier with Coinbase.
I love it. I love it. And I know, Kevin, we'll dive into this in a little bit, but I know you're a big proponent of killing the API key, which I just love. So we're gonna talk about that in a bit. But before we do that, Ryan, thank you so much for joining us. For those of you that don't know, Cursor is, I think, probably the biggest agentic coding IDE, or at least one of the top ones in the world. So super excited to have you here. I think you'll bring a very refreshing lens to our oftentimes very crypto-centric crowd. So yeah, I would love a super quick intro from you, and then just kind of where you see the broader world of machine-to-machine payments and autonomous agents fitting into, your guys' kind of side of the industry.
Yeah, no, thanks for having me, guys. Yeah, I'm Ryan. I'm on our field engineering team. On the field engineering team here at Cursor, so generally helping folks understand the product a little bit more technically, dealing with a lot of different agentic use cases across different organizations. So for context about Cursor, we're an agentic coding tool where over 60% of the Fortune 500 companies use us for doing their software development. And so we've seen a lot of trends around using agents for a variety of different development use cases, but I think those use cases can be broadened across the board with more autonomous business logic across different industries. So don't have too much experience with machine-to-machine payments particularly, but in general, like these agent patterns we've already seen as very powerful tools, and just kind of having like long context memory, having agents do multi-step tasks across different use cases. So like you can imagine like MCP tooling to open up to different types of systems across the board, and having the agent pull down something with an MCP, make a decision, make a subsequent decision, and then make another tool call. That general pattern can be generalized across the board to different autonomous use cases. So super excited to see how that plays out and get some insight from you guys around the payments part of things. Also, for context, I did work in crypto before this, so I did a short stint at Coinbase, and I was a software engineer at Messari for 2 years. So folks are familiar with, I guess, aka the Bloomberg of the crypto markets, as we like to call it. So love the folks there. Still have really close relationships with people in the space. So glad to be on.
Amazing. Yeah, thank you so much for joining us. I think it's hard because there's so much that I want to talk about, and we do not have that much time. So I think where I'd like to start is kind of asking, I want this to be a pretty open conversation because I think there's so many directions we can go, but I think probably the biggest, I want to say, accelerator over, in my eyes, the last 3 to 4 weeks has been X402. I think agentic consumption has been kind of this slow and steady growth that had a huge spike, and now it just kind of keeps getting adopted through all your different MCP style tooling and extensions. But I think a huge driver is, we're seeing all these open protocols be designed that are really pushing things forward. So would love to just get an idea from each of you on where do you see the current adoption? Are you seeing that from these open protocols? Are you seeing that from specific tools? And what do you think that next big thing is going to be that's going to drive the next significant kind of growth spurt for the world of autonomous agents? And we'll start with Kevin this time.
Cool. Yeah, I think agentic tool usage is here, and I think as Ryan hinted at, like all software engineers or a lot of software engineers are using AI-driven IDEs with MCP extensions to better understand documentation, interface with APIs, and that's here, and that's a growing trend. Tool usage is really critical to unlocking the utility of language models. I think what's a little bit more nascent is the machine-to-machine payment aspect of it. So figuring out how we can monetize frictionlessly these tools has been what I've been focused on at Coinbase in building X402, and that's what I'm excited about. I do think that what we're seeing is kind of a nice looking growth curve, and we're seeing people from across different fields and industries participating in building an open standard for machine-to-machine or agentic payments. And so the analogy that I often like to make is that Kubernetes was incubated by Google and really drove kind of the cloud revolution around containerization and really cloud 2.0 in the 2010 decade. But while it was incubated by Google, it was adopted by all different kinds of cloud service providers. And I think we're hoping X402 takes a similar trajectory where may have been incubated by Coinbase, but we're building a kind of incredibly neutral foundation around the governance of X402. And we have awesome partners like Cloudflare, Vercel, Google, Firecrawl, FreePick, companies across kind of the cloud and AI space participating in driving really an open standard around cloud payments. And so I think the monetization of these tools is really the next step, the next wave for agentic tool usage. And it's a really exciting place to play. One of the cool things that it enables is more autonomous agents. And so just like in the real world, to really have freedom, you kind of need a wallet, you need money to go participate in society. It's kind of the same case with agents. And so when we give agents a wallet, we let them reason about tool usage. They can actually do really interesting things, like they can build fully autonomous economic loops where maybe they're trading, or maybe they're monetizing social posts, or they find a way to monetize that then pays for their own inference. In this scenario, these agents are almost kind of a proto digital life form. These are agents that aren't even necessarily tools. They may have been seeded as tools, but now they're existing autonomously and paying for their own inference. That's a really cool use case that I'm excited about. And I think that we'll see more and more kind of assets under custody amongst deployed agents in the future, especially as agents start to supersede humans in terms of their reasoning capability, kind of their memory being their context window, and their ability to kind of execute in the market. So I think it's really exciting times to play, exciting times ahead. And really this emerging ecosystem reminds me of like the early days of Ethereum, or kind of like the early days of crypto. It's a lot of builders who kind of share this vision and are working together to make it happen. And so we're seeing adoption across the indie developer community and kind of the larger enterprise community. I'm really excited about it, but it's still early days.
That it is. We're going to dive more into some of that in a few minutes. But Nick, over to you. What are you kind of what do you think the adoption really is at right now, and where do you think? Obviously, we've already talked about the commerce side, but more specifically, what's going to be kind of that next thing from your guys' side that you think is really going to drive that growth?
Yeah, the commerce stuff is happening. I wouldn't say it's widely adopted yet right now, and it's happening in smaller forms, meaning commerce is happening right now primarily on fiat rails. Within those rails, if we think about traditional credit card issuers, there's only a number of them that truly support these types of transactions today. Throughout the networks, Visa, MasterCard, Amex, they are still developing, and we're lucky enough to be working with them to design how this is built out, but developing the protocols, the policies, into how these transactions will look. So I think there's big steps to take, not only on the merchants that can accept these types of payments, but also the issuers that support these payments. And ultimately, like anything that you can go online right now and buy with your credit card should be available to you through your agent in the future. I think the other thing that I really liked, which Kevin said earlier, was having agents be able to not only discover, but pay for these tools. That could be software, they could be services, they could be content, even potentially in other forms. And I think like that transition pushes us towards where I think commerce will go in the future, which I know the four of us are all excited by, in that those payments happening on chain and using stable coins. And I think that's an evolution of commerce, let's say, but generally agent payments for real world good services that doesn't exist right now.
Definitely. How about you, Ryan? What are obviously, again, you're coming from a little bit of a different lens, something a little bit more. You're much more explicit, right? And where you're focusing since you're on the agentic coding side of things. But, what do you think kind of the big unlocks will be, and where are the challenges that you guys, obviously you're having incredible growth, which is awesome, but where do you see it kind of, what's next for you guys to really keep that growth going and see even broader adoption?
Yeah, I mean, it's even, even from our perspective, it's definitely an area we're looking towards building out. And I think it comes from a fundamental thesis, at least from the software engineering perspective and the software engineering tooling perspective. Like, what do we see the future of software engineering look like? Like, what does this engagement with code and humans look like in the future? And we believe that it is some sort of a hybrid, but it's a hybrid version of like an autonomous piece and the human. But the human is doing less and less over time. Not that they're not, intelligently defining what these systems looks like, but rather kind of some of the brunt work and kind of the manual syntactic work is done by this autonomous piece, and they're able to be more higher level logic designers. And I think this actually meshes well with the ideas put forward by Kevin and Nick, where from Cursor's perspective, we have this feature now called background agents, where you're able to specify a high level task. It connects to your GitHub repo. It's able to spin up a repo asynchronously in the cloud on a virtual machine, do the agentic flow in the VM, and then output a result of that agentic flow. And ultimately, that pattern itself of kind of like having this agentic flow outside of an IDE or outside of the constraints of a single system, that's something that can be abstracted outside of just software engineering, right? Where you have this high-level task that an agent needs to do. It has a set of tools at its disposal. As long as these tools are able to efficiently, pull in the context for the necessary task at hand, and they're able to efficiently output whatever their output is to a subsequent process, that's an abstraction that can be used broadly across the board on tasks other than coding. Because I think this is a sentiment at the company, and also this is a personal belief of mine. I do believe ultimately any use case that an agent has can be boiled down to something mappable by a generalized function in code. And if you can have a representation of any generic thing on the internet, whether it be a payment system, whether it be an e-commerce interaction, if you can boil that down to a function with the sufficient parameters and the agent has the ability to pull that in, you can kind of build a generalized do anything agent. And I think we have the steps and the building blocks to get there. And I think code is a really good sandbox to kind of identify that behavior. So that's something we're more excited about, like kind of having this autonomous regime within code, but it can definitely be broadened out, and hope to see that at some point.
Yeah, I love that. I think I think it's really interesting because I see I was definitely a latecomer to the agentic coding game. I was a big disbeliever in it at the start. I was like, there's no way this thing's gonna be able to do it better than me. But I mean, it's pretty crazy what these tools can do now. And as I've kind of started exploring more, I think I've really seen as you start to add tools in how much the agentic coding gets better. It's like orders of magnitude better, right? And so I think what's really interesting is I equate the tool usage and the discovery of them to something almost similar to the expansion of cloud, right? Like most developers, not most, a lot of developers don't really run a lot of things locally on their computer. They're not necessarily super in tune with cutting edge technology. They don't know, I know a lot of developers, they don't know what the difference between npm install is versus npx, right? It's just not things they have to do in their daily driver. And so I think what's interesting to me about bringing all of this together and why I think machine-to-machine payments are going to be so critical is it unlocks a world of opportunity for any type of agent. And what I mean by that is if I want to have a general purpose context MCP, that is basically, I have an agent that's running and it's tracking my context, constantly summarizing, it's improving the capabilities of that agent. If I can pay, per use for that context or pay, to store small amounts there temporarily, it's probably a lot more feasible to gain adoption for most developers than forcing people to download and run this locally on their computer. Just because I think for a lot of people, they're not used to those processes. They're used to, let's throw it in the cloud, let's throw it in a CI/CD runner, let's throw it on a serverless function these days, whatever it is. So I think there's a lot of opportunity there, which I'm really excited about. And I think it then brings us to kind of the next question that I think is probably pretty relevant to all of this, which is in a new kind of a new industry, new paradigm that we're kind of seeing, right? All these new primitives coming to not just blockchain, but to society, right? Artificial intelligence, large language models, the ability to just kind of automate huge pieces of our life. I think there's this big question around privacy, compliance, and how do we actually not just protect users, but how do we protect also the agents who we're giving a ton of data to? And, you know, I think it's a very broad topic. And so I expect to kind of have some different answers here, but would love to just hear, not too deep, but just kind of high level, where you guys see that fitting into your products, the specifications you're working on, or just the broader adoption of this of these industries.
Yeah, I can start. I think that there are a couple kind of like dimensions to this question. The first really lies around like, how do we prevent agents from doing things that are misaligned, things we don't want to do? If we're giving agents access to money, like we don't want them to go spend all of our money frivolously, right? And so how do we set guardrails around agentic commerce? And I think that's where tools like Policy Engine come in. And so at Coinbase, if you build an agent with an embedded wallet, you can set policy guardrails, and you can basically limit the agent to only be able to spend $5, $10, $100 if you'd like. And you can also whitelist certain contract addresses, so you can limit the tools that the agent can interact with. So for a lot of developers who are kind of approaching this from like an early stage, almost R&D perspective, these kinds of guardrails, these policy engines are critical to kind of prevent runaway spending of agents. So that's one dimension. Another dimension is kind of, as you mentioned, around data sovereignty and privacy. That's also equally important. And so the kind of the standard way that people approach that today are like through scoped OAuth permissions. And so those are built into the way that a lot of people access APIs today. And I expect standards like that to continue to relate to how agents access data. I think there's definitely a distinction between like data that you want to monetize that's public, but that you might not want ingested broadly into the language model ecosystem, but available to be ingested into context. If you want to monetize that, that's something that's more public. But if it's private data, it needs to be kind of very tightly scoped from a permission standpoint. And then the last piece is obviously like financial privacy, which a lot of the blockchains are addressing as well. So those are the three dimensions that kind of I've identified, within that scope. But I'm interested in hearing from the other panel members as well.
Yeah, I think you hit on a bunch of the important ones to be thought of. I also think that at the network or perhaps the protocol level, you see Google's agent payment protocol coming out, OpenAI and Stripe had ACP come out. There's just a need generally to define the rules, like what are the security and policy controls for autonomous actors? Where does the burden of liability lie when it makes a mistake, right? Now, all of a sudden, there's a new actor in the flow of funds that previously isn't part of the consequences. And today, there aren't many controls, or there's not really a great way to put blame on that. Do you put blame on the developer? Do you put blame on the developer tool? Like where can you actually track what happened and what went wrong? And then now how do you introduce that into policies and rules at the network protocol level to think about that? I also feel like it's really great that these companies are starting to think about protocols for this and build infrastructure and networks to support these types of transactions. I wonder though, for real adoption, if they'll need to somehow not only standardize the payments primitives, right? How do they transact between each other? How do things like invoicing, how do things like returns happen across all of them so agents can behave similarly? But then also like, how do you interact with all of them at the same time with it being as seamless as working with Visa and MasterCard right now from merchants and from users and for agents in the future? So yeah, those are interesting things top of mind for me, especially as you think through commerce, because while we all really want commerce to happen with stablecoins only, there's an inevitability that fiat rails will be very important. And agents will have to interact with both of them. And so having the rules in place to do that, and for us building infrastructure on the Crossman side to support both fiat and crypto payments is important for us to drive that narrative forward.
Yeah, from my side, I can speak towards like the controls on the agentic orchestration piece of it. We definitely see like a lot of needs from enterprises in terms of managing what the agent can do on the behalf of the user. And I think this definitely applies to systems that have these agents run autonomously and doing things that are relatively high risk, like payments. So a couple of those controls, a couple of different dimensions here. I mean, the first dimension is just like the nuts and bolts of like what the agent can do in terms of commands. And so I think having a separate layer from the underlying execution of like the shell command on the machine, having guardrails in place such that even if the LLM part of the agent, before you hit the tool call, if it decides, hey, maybe I want to delete things, the deletion is prevented on the machine level and not on the LLM level, because ultimately language models are fundamentally non-deterministic. And so even if you supply different guardrails in terms of like high-level rules, which I'll get into in terms of guidelines that the LLM can inject into its prompt, ultimately you should have extra guardrails on that tools layer. And I think it's important to kind of get a sense of the trace of actions that the agent takes on any sort of machine it's on, so that even if something does go wrong, you have that layer of observability and you're able to kind of guide and tune your system so that you only go into the paths that you want and not the paths that maybe potentially cause financial issues in the use case here. The second piece is the layer where you do influence the language model's output by doing high-level rules. So if you've ever used Cursor before, there's a concept called cursor rules. So .cursor/rules in any directory of the code base. For the sake of Cursor, these rules are effectively markdown files that you can give high-level instructions. And so I imagine for a payment processing agent, you'd probably have rules dedicated to what tools to use, whether you're accessing a crypto wallet or like a traditional fiat payment tool. Both of those will probably have rules and tool descriptions associated with them. Essentially, these are just extra prompts that you're giving to the agent so that when it is calling the tool, you're making sure it's calling it given the proper scenario and with the right parameters that it can guide based on the information it has available. So for the sake of software engineering, we have tool or rules available for the agent in the IDE, but I think this pattern is definitely being seen more broadly across the board with agents, where you have a subset of effectively extra prompts and extra information for given use cases. So I think making sure that those guidelines are set properly for whatever use case you have, in addition to the actual machine level controls via like block lists or via shell scripts that disallow certain commands. I think the combination of those two practically should help add an extra layer of defense against either malicious behavior or the agents going awry.
Can I add one more thing to that? One more interesting question? Yeah. So I think another interesting dimension that I think we're thinking through, and I think the ecosystem's thinking through, is at the discovery layer when an agent discovers the tool and the tool signals okay, it costs 1 cent to give me the weather in San Francisco, right? For example, how can we create reputation systems that are agent first, almost similar to kind of PageRank on Google, where we can have reputation associated with these external tools, these external API endpoints, such that agents know that they're getting verified responses. And this is almost an eval question that I think is also really important for the ecosystem to dive into, which is how can we create reputation around the discovery layer for tool usage with agents?
Okay. There's a lot to unpack there. I think I think the first thing, right, that's really interesting about all of this is when we think about the guidelines. So far, we've primarily been putting guideline or rules in to try to control the agent to a certain extent, either at the machine level or at the IDE level, at the code level, right? We have these different kind of layers that we put on. But I think a really interesting question, and why blockchain is potentially so interesting here, is what if we could put some of these rules on chain? That way they can't be manipulated on accident, right? What happens if the manager clicks the wrong button, pushes the wrong code, and all of a sudden you accidentally just paid $1 million for a tool on accident, right? You didn't need to do that, but the manager pushed the wrong line of code and there was no immutability behind that rule. So I think that's one potential way to think about why blockchain could be really potentially relevant to how we start to design these systems. And I think, Kevin, to what you're saying, there's been a lot of work, and I think it's become much more prominent in public over the last couple of weeks around the trustless agents framework or protocol. So that's ERC 8004, which is coming from MetaMask, I believe, a member of the Coinbase team, a member of the Google team, and I know for a fact I'm missing someone else. I apologize to whoever it is. But, thank you. Right, staring me right in the face. But this is that's a protocol that's designed to actually live on chain and start to lay the groundwork for what could potentially be this very open and collaborative base layer system that extends and works with agent to agent protocols and allows for different sorts of payment mechanisms.
to be used. And so I think it'll be really interesting to see whether that is something that we can kind of loop all the way back down into just like, a coding agent, into an agent that is just going shopping for you, right? And it may not be a full-blown like swarm, but it allows for that identification of, who's got good reputation. Is it, can I justify that this is a good way to spend my money, or my agent's money, or my agent's spending my money? And then lastly, I do think, Nick, to one of your points around, we need to be able to support existing payment methods to help drive forward adoption, right? The whole world is not just going to snap their fingers overnight and magically come on chain and be using stablecoins, as much as we would all probably really enjoy that. It's just probably not realistic. And so there's been a lot of work done on the Coinbase, the X402 V2 specification that's currently out for request for comment. And there's very specific call outs for not just different types of payment methods in there, which I think is great, but also schemes. And I think maybe Kevin, you could probably articulate this better than I can, but I think schemes are potentially a really great way to kind of bring two and two together from actually using blockchain to have some of those rails around what you can and cannot do, and connecting any type of payment method to the broader agentic world.
Yeah, that's right. Yeah. And so I think when we think about X402, what we're doing is we're enabling the 402 status code on HTTP, which has been built into the internet since the late 80s. And companies like PayPal and others have tried to activate it over the years. We think we're at kind of an inflection point with the rise of agentic commerce, being able to leverage kind of server native paywalls. And so with X402, you can monetize any server, any resource on the web. And then what the schema does, the schema defines how that server is requesting payment. And so that can be the specific network or the network token. It can be tokenized credit card based flow. And so the kind of the explicit goal for X402 is to be payment agnostic, but to support different schemas and definitions to really create the standard around how these payments work. And I think that kind of lends itself to kind of the conversation around the importance of open standards and the work that the Ethereum Foundation is doing and has done on creating standards that generalize across the industry. Because I think the biggest risk right now for the growth of agentic commerce is fragmentation. And by creating an open standard that the broader industry can align on, we can solve a lot of those problems and grow the pie faster than we would be able to otherwise.
Definitely. I think that's where, we're super excited. I don't think I've thanked you guys yet, but thank you so much for joining us today. It's so exciting to be, working with a team who's focused on helping drive these forward from the blockchain perspective. Because I think what we're seeing with a lot of blockchain right now is this drive toward, I would say, vertical style implementations. We're seeing a lot less general purpose blockchain, and we're seeing a lot more people try to focus on very specific things. And so I think that is a huge part of what we're doing with, Byte Protocol, which is blockchain integrated threshold encryption, bringing privacy natively into the consensus of a blockchain, private state, private transactions, things like that, as well as more broadly with, our existing scale network that has zero gas fees, instant finality. We can horizontally scale up to quite literally an infinite amount of block space as needed to support an infinite amount of agents that may come online, or even embed those agents in the blockchain. And so I think it's really exciting to see these types of open protocols coming online so quickly, because it really gives, I think, teams like us the ability to actually come in and figure out how to adopt and support and contribute, as opposed to it being something that's siloed and then very hard to kind of get involved with. I think maybe a good example of that would be like, Agent Commerce Protocol from OpenAI and Stripe versus like X402, right? Like they're both functionally open protocols, but X402 is a lot easier for people to build with because it's not primarily just integrated in ChatGPT. So I think giving people that access point has really made a difference to allow external contribution. But enough rambling from me. I think the next kind of thing that I would love to ask each of you, and we'll kind of let this turn into our free-flowing conversation to close things out. Obviously we all have this belief that agentic commerce
machine-to-machine payments, machine economy, autonomous agents. It's the future, right? It's where we're going. Society is growing fast that way. We're seeing adoption of these types of systems like never before. What is, 5 years from now, 10 years from now, maybe even 12 months from now, how fast this stuff moves? What is going to be, in your eyes, not at the protocol level, but almost at the, we'll call it like the macro level? What's going to be that thing that is really like the trigger to bring just a surge of usage toward autonomous agents in everyday lives or machine payments in people's everyday lives? Everybody that answers will be 100% wrong. So,
I was going to say, if we knew what lever to pull, we'd pull it all right now.
All right.
Go on, Ryan.
All right. So maybe a more relevant question is: do we see this taking us toward? Do you see the track that will be hit first being more human to agent, or more just broad autonomous agent systems? In the sense of, are we going to see this continued adoption of like using ChatGPT and using Claude and seeing this growth of tools and machine payments from me prompting one of those and it going and doing something for me? Or are we going to see more of this like business enterprise adoption where I have an agent system that works for me and I just say like, here's my money, go make me money, or here's my budget for the week, go figure out my groceries? And like, which direction do you see a little bit more of? More human in the loop or more just pure autonomous agent swarms?
From my perspective, working at Cursor, I feel that the intermediary is going to be human in the loop, at least for the use cases that I'm closer to than I think some of the more financial ones. But I think they map in a way where even if you have a fully autonomous agent, I think for an intermediary piece, just on a psychological level, as humans interacting with agentic systems, there is a level of agency, I guess pardon the pun or the misuse of the term, but there is a level of agency that you kind of want when you're interacting with these systems, at least from a lot of the users that we interact with. I think even when you have the agent running and doing things for you autonomously, you still want at least a status update, or at least maybe an extra guardrail saying like, hey, should I run this command? Or hey, I'm doing this thing, so that you feel that you do have some level of control over a majority autonomous process. And the time savings could be maybe like 80% time savings, but even that extra 20% left where you need to impact the agent's flow or its direction, I think adds this extra layer of psychological buffer where it's like, I'm still ultimately steering the ship. I'm doing what I intend to do via this agent rather than it doing it for me. That's not to say that perspective could shift over any reasonable amount of time. I think maybe our attitudes towards agentic systems could allow them to have a little bit more of a controlling focus in our lives. And I think at least from the engineering level, there are certain engineers that are already bought into that completely, where they'll let the agent kind of come up with a full change without even looking at it. And then at the end, they maybe approve the changes or go back in and make little tweaks here and there, but they're totally fine with the agent doing everything for them. So I do think the majority wants to have a more active presence in that process and to be there as a human in the loop. But it seems to me that the trend is trending towards like allowing the agent to do more and more over time.
Yeah, and I would agree with that. I think that they're really two buckets. So the bigger bucket is like human-driven agentic systems. And I think to your question of like, will there still be interfaces like ChatGPT and Anthropic? I think yes. I think those are really becoming kind of the operating system for kind of the agentic realm. And I think there'll also be more B2B type use cases that might be more deployed at the system level. That might be automating tasks around customer support or what have you. So I think that bucket will continue to grow, and that's going to see a lot of growth in the next few years. The bucket of like fully autonomous agents, it's like a small bucket, and I think that there's a lot of benefit to people who want to experiment in that realm today because it is more nascent. But like there's also a lot of potential in that bucket in that world as well. But they're really kind of two discrete things trying to do different things. And I think they'll continue to kind of grow in those paths. And I think much like, as a manager, you want your employees to check in and provide updates, and you provide guidance. I think that there'll be human in the loop type guardrails and guidance for a lot of the to human intent-driven agentic systems.
Yeah, the sentiment that Ryan and Kevin are sharing of governance, let's say, moving from very manual supervision to ultimately entirely policy as code, I think is one that we'll certainly see. I also can imagine that depending on sort of your question, like where do we see the most adoption in the near term, will probably depend on the use case, right? Like with, I don't know, there's very much verifiable resources or exchanges that can probably happen earlier than others. If I think about, I don't know, a shipment or a lot of these like cargo type products and services, you can very much clearly verify if goods have arrived, release payment automatically. That feels like a pretty simple, verifiable outcome. Auditing will shift from there to have transactions on chain, hopefully. And for me, the way I think about these types of payments is similar to how, in my opinion, APIs somewhat abstracted data generally. Payments will hopefully become these programmable endpoints where every service, software, application, agent, they'll have wallets, they'll be capable of spending, earning, making transactions, ultimately governing themselves autonomously, which is really exciting. And then, we're trying to help build infrastructure for people building in this future.
Definitely. I agree with all you guys wholeheartedly. And, to kind of wrap things up, I think it's something that I was very fortunate to get to go to a private event and meet a lot of really great people a couple of months ago at Google. And one of the things that really stuck with me from that was this belief from so many people that blockchains were built for machines. And I never really thought of it that way until more recently. And it actually makes a lot of sense, right? These things use bytecode. They're kind of hard to process information on. User experience generally is pretty bad. No offense to all the wallet providers out there. Obviously, we're seeing a lot of things from like Coinbase Developer Platform or CrossMint. You guys both have wallet products that are 10x better than a non-custodial that requires a seed phrase. But generally, the user experience has been pretty rough, and it's now finally getting better. But I think what's really interesting is that as we see these types of things get adopted, I think we're going to see a pretty big paradigm shift in how compute is designed and how these companies implement. And that leads me to killing the API key. API keys allow access to resources, right? There's an API. I procure an API key. I access the resource. Maybe it has some scoped pieces. I think kind of closing out with X402 more specifically, one of the things that's really exciting is it has this ability to, kill the API key, right? We can start to think about authorization, scoping, access in entirely new ways. And so I think for me, the future of finance is going to be very dependent on this kind of new shift of we can access and consume resources in a whole new way, and we can obviously delegate that out to agents. So very excited for the machine economy and the future of this. Any last words from you guys before anything else you want to share with our incredible audience that stuck with us for like 4.5 hours today?
I do have a hard out, so I'll have to drop, so I guess I'll go first. Thanks for having me on the panel. This was a great discussion. For folks on the call interested in agentic programming or agents in general, definitely give Cursor a try. It's a good way to get started in like the nuts and bolts and how to think about agents, and then hopefully you can use that to build some autonomous payment agents in the future and use all the great tools suggested by the folks here. But yeah, thanks for having me on the panel.
Thanks so much, Ryan. Anything else, guys?
No, maybe just a quick thing is, what Kevin and team are building with X402 is incredible. Just highly recommend everyone to try out the infrastructure that exists today so you have context as that continues to evolve for the future. There's a bunch of open APIs. There's a bunch of people building, CrossMint included, in this space. And I think just becoming knowledgeable about what's happening right now and scaling there as this evolves, I think it'll evolve rather quickly. That it's probably the only thing that's for certain is the best place to go. And if you have questions, Kevin, Ryan, who's just on, and I would be great resources.
Yeah, I would echo that sentiment. Thanks for hosting me. Thanks for having me on. Definitely check out x402.org. Feel free to check out the GitHub repo for X402. We have a Telegram channel. If you reach out to me on Twitter, I can invite you to the developer Telegram channel. which is pretty high signal, and it's a great place to be to kind of get into the loop of what's happening in the space. And I guess the parting thought is like, do we think that agents will want to use credit cards or stablecoins? I think stablecoins are really well suited for agentic commerce. They offer lower fees. They're more programmable. And I think agents don't have the same cognitive biases or like kind of like baggage that humans have in terms of like, agents will essentially choose the lowest cost way to transfer value across the internet. I think stablecoins are a great platform for that.
I agree. Thank you guys so much. And for those of you that have not heard of Scale before, or if you forgot, Scale has 0 gas fees. So if we've got a whole bunch of agents doing payments, well, it's probably going to be cheapest on Scale. So if you're building agents, building on X402, building anything, DM either of the fellows up here on the panel, or feel free to reach out to me. Happy to help get you set up with X402, Crossmint, and Scale all at the same time. And you can get quite literally the best setup for agentic payments, machine-to-machine payments, and autonomous agents in the world. Thank you, everybody, so much. I believe Ben's going to hop up here and close, but Kevin, Nick, really appreciate your guys' time. And thanks, everyone.
Thanks so much, Sawyer.
And with that, we have concluded the very first Fairgrounds hosted by the Scale Labs team. Just a quick note, one of the things that always comes to mind when everybody talks about AI agents and where things are going and what they're capable of doing, I personally want agents that do all of the stuff that I don't like to do, so that I can spend more time doing the things that I do like to do. So I really like that we're going to see humans doing less and less over time, the grunt work being done by AI, with humans being more involved in the higher level logic design. That really stuck out to me from our last conversation. So just to put a nice bow on it, thank you, Sawyer. We didn't go 4.5 hours, just a shade under 4. To the 95,000 plus viewers out there, thank you for joining in. Hopefully we provided you a little bit of entertainment, a lot of education, and something to take home and talk about with your community as well. I want to go through, and we'll make sure to share out over the next few days breakdowns of each of these panels. But a big thank you to Andy from Transact, Chase from Braille, Angel from SpherePay, JT from CoinFlow, Vladimir from Algebra, Juan David from KeyRock, Kenk from Eliza, Noah from Upside, Stefano from Virtuals, Nick from Crossmint, Ryan from Cursor, and Kevin from Coinbase. All of them took time out of their busy days to be here with us, to impart their wisdom, and just a big round of applause for them coming on and just being overall great sports in our very first Fairgrounds. Follow all of them. Follow Fair, follow Scale. We've got a lot of big stuff coming out. And thank you all for joining us today. And stay tuned for the next edition of Fairgrounds that we'll be announcing and rolling out relatively soon.